Good morning and welcome to the Breakfast Club. My name is Darren Hancock and we are live here on May the 7th, Tuesday, May the 7th. Welcome, welcome all you people. All right, what have we got in store for us today? Okay. I got some ideas here. Let's make sure they're up and live first. Nothing would be worse than to start this whole thing and we're not even live. And there we are. We are live. Who's first through the door this morning? Tommy. Good morning, Tommy. Welcome, welcome. Don't forget to hit the like button. There's just two of us in here, man. It's just you and me. Thank you. Appreciate it. I'm hitting 100% right now. Okay, Tommy. What have we got here? I'm going to come back to NS or NQ. Yes, I'm looking for that high fair value gap 4-hour to get hit again. It's now an inversion. So if we come up to 221, sweep this 214 high, which you just cleared it now. Run to this fair value gap. Ideally, you want to get right back up in here. I've been calling this for days now. And you're going to hear me say this over and over and over again. So hopefully it sinks in for you. Like array to like array. Okay, this is a reprice rebalance. You could look at this one here and say, okay, we've got a reversal here. I do like this reprice rebalance that happened here. Come back inside, deep inside. Stop loss would be down here. Multiple times you come back into that. Now that we have a body that breaks that high, come back down into it multiple times before running from discount to back into this premium. So this is my upside objective right here. And we may run through it, take out the highs before we start to make our little June dip down into July and August. So looking for further upside, and we're maintaining upside all the time. We've got there's your swing here, fair value gap, body breaks it here. We don't come back into it here, so you look for this one. Body breaks above it. Oh, sorry, this order block, that one's sitting inside this one here. Body breaks above it, come back, tap it, continue higher. And look for an objective over there that you want to reach for. Retracement back into 50% of this range, back into 50% of this range. Then it continues back down into that area we've been looking for. See how that perfect fill there? Then we finally get the move upward. So looking for a retracement back into this area here. Fill this one more time, continue higher. We have the gap. We didn't really sweep this low. These are still intact. So if we just get a reaction off of this daily fair value gap and start to run back down into this, I'd love to see that. See this turning into we've already got a reversal happening here. We've already swept these old highs here. I like this as a potential reversal right now, actually. Keep your eye on this area right here. And if we run below this, look for a tag in here or right here. We want to see a body get through there. Dixie still inside this weekly and daily fair value gap. We got a daily up here as well. That was the inversion, the swing point. This one's actually higher than that one. So we've got the body breakdown right here below that low. So we could run back up into it here, hit the bodies, then reverse. Right now we've got to fill that fair value gap right there. So if we get, and we've got a nice little reaction off of that. So if we could get this, start digging down into this fair value gap from here and leave that open as a breakaway gap, that would be awesome. That would make these Euro and British pound go higher. So again, we're looking for a dig up into that daily fair value gap on the euro. Now that we found support off of the bottom of the fair value gap, we came back and hit again off of that. Now we're looking to really push through this. Swing right here. Body comes back right inside it. Nice for, and that would have been a beautiful run up. Takes out these lows. See that reversal pattern happening. Stop loss would go here. And you're aiming for your higher objective. So if you just left that on in the morning in London, when that happened in London, is that London? 7 o'clock? No, early. That's that little space in between London and New York. So you catch that right off of 802. It's like the 755, 802 silver bullet. If you weren't sure about that one, there's another one here. 810, 808, 810. And off to the races you go. Wow, okay. Your 9 o'clock silver bullet right here. 906. Come back into that silver bullet. Take out that high. I don't know what that's worth for you in pips. I haven't done euro for a long time now, so. We're just past the midpoint of the space in between the two fair value gaps, and that's typical. You'll see a lot of bouncing around in there between the two. I'd like to see that push higher as well into this fair value gap above us. And that mean threshold, I like to see that hold and this continue pushing higher. If this just goes sideways now underneath here, euro is obviously the stronger one of the two. We're already in our fair value gap here on the daily, and we're pushing higher. So I like that as the stronger one of the two. CAD has run back up at its fair value gap. We still haven't had a fill of that yet, so I'd like to see that stay open. And the 50% or the mean threshold or consequent encroachment of the BISI here seems to be the support level. Now I want to see that just kick off there and continue pushing down to fill the rest of this fair value gap below us, take out this old low. Watch for 50% of the wick to go. If this does start running back up and we start getting support on top of this fair value gap, I don't want to see the mean threshold of this get taken. If it does, then on the close, that switches things up for me. All the time we're below this fair value gap, I'm bearish on the CAD. This is what we wanted to see. We wanted to see them get through this fair value gap on the upside, this inversion. We closed above it. We came back down, tapped it again. And we're looking for push higher to take out these equal highs, and then look for the rejection block just above us here on the daily. That's your upside objective. So if you're using that as an upside objective, look for your opportunity right here. Takes that low out, fair value, yeah. Come back inside, find support at the mean threshold. And we're running, taking out the highs. Pay yourself on the way up to the mean threshold of this candle. So you want to see these provide a level of support now. Then come back all the way inside here, all to the top of this breaker. That'd be nice if it held right there on top and continue pushing higher. Get through this breaker here. So it's this breaker against that breaker. Breaker to breaker fighting. So who's going to provide support? Who's going to give way in terms of higher or lower prices? You want to see this stay open and push higher. That's New Zealand dollar, Aussie dollar. Seems to be the stronger of the two. We've already really cleared. Look at the difference between those two. This one's just barely making it above here now. And now Australian dollar, it's pushing a higher high. New Zealand, lower high, lower high, lower high, lower high, higher high. And it's coming back, rebalance back to this old high here. And we've got a nice reaction off of that. So I'd like to see it start really pushing higher now and start taking out the rest of these old highs and pushing for higher prices into June. Japanese yen, I like that reverse, came right back up into there. Now I'd like to see that come back down from here. Take this old low out and start digging into this consolidation. You don't want to see more than 5% or 50% of this wick taken out. So you want to see that it can trade up into that, but you don't want to see it trade through it. Oil, you've got a reversal in oil already. Right here. Body pops up above it. Look at that one right there. 2 minutes ago was a perfect entry for this long. Right there. That was 2 minutes ago. So if we would have caught that 2 minutes ago, we would have said, oh, there's an entry right there. Let's take that. And that's on the way up. So you got buy side liquidity up here. You've got liquidity pool sitting right here. So if you miss these, you can catch a run from here. Let's take one from there. Right off that big old order block right there. Your stop loss has to, your stop loss cannot be traded without this. Oh, I'm in the wrong one here. Leap. We don't want to be in leap. We want to be here. Let's come right into that. I like that right there. Stop loss down here. All right. These was, you're not interested in this stuff, and this is silver, I think, and gold. Yeah. Okay. So gold. Let's have a quick look at gold. Nasty bit of action going on there. Nothing here, nothing here. I get really nothing for gold right now. You're in the middle of this whole range right here. You're sitting around 50%, so you're stuck in the middle of it. See how you've gone from high to low, created that small range in here, come back into an optimum trade entry, reverse, come back into that little reversal right here. This would have been the nice reversal to catch this run up in here. And this is where you simply, I did this last night with Bitcoin. I couldn't sleep at all last night, so I was up at 3:30 in the morning trading Bitcoin. If you run down here, if it runs back in here and you catch this reversal here, stop loss would be here, catch this. and you start to run it back up. As soon as you hit 50%, your stop loss goes to break even. As soon as you hit 60, you bring it up to 50. Hit 70, bring it to 60, and pay yourself at 70. And then it comes back, takes you out. And you literally caught the full run all the way up from this reversal. This is using the fib tool to, when you're in large ranges like that, this is using your fib tool to manage your trade. Now, given you may pay yourself here, this is just one way of many that you can use to manage your trade. If you're not familiar with a lot of the PD arrays, this is usually a good way to manage it off of here. Because if you're looking for an optimum trade entry as a chance to reverse, then you pay yourself at these key levels. So 50%, usually it can hit 50, just over 50 and go. So you pay yourself at 50 and move it to break even. And then if it comes back down into the range, look for the next range and look for the opportunity to get in long again. So if you entered in here at there, and then it came all the way back to here, and you say, well, I can enter in again, and I'm going to pull the fib tool from here this time. You start from this high. Oh no, I guess you'd have to start from there to there. So if you re-entered your trade again down here, stop loss is here, 50%, move yourself to break even, take your first exit rate here, and if it doesn't make it to 60%, well, you've paid yourself at 50, and you have it finally comes back and takes out your stop at break even, but you paid yourself here. Oh, wait a second. No, you didn't. When it was here, it went boom. So it hit 50, hit 60. So you drag it up to 50% now. Then it hit 70. So you quickly pull it up to 60, 75, 70. And you have to be watching these, because this was probably one of those whip up and whip down things. But if it just started marching up here, you start to march up your stop loss behind it. So you would have marched this all the way back up to 75% right there before it finally came down and took you out. If it didn't bop up and down here, I can't tell you because I don't know for sure how it acted inside this candle. But for the sake of argument, if this just kept marching up, you just chased your stop loss behind it by just one, or you set little sell limits like 1, 2, 3, 4 at each one of those. As soon as you enter in, you put a sell order here, sell order here, sell order here, sell order there, sell order there, and one more for the end if you're looking for the finish. And that would have ran through a whole bunch of them before it came back and took you out. Anyway, that's a method you can use or not. Bitcoin. Oh, I'm in a Bitcoin trade right now. And that's taking out that high. So I'm closing that. So we got this reversal. So like array to like array. That's all I want to do. We can come back into this consolidation now. So we've gone from like to like. You're out. Quick and easy. Any questions? If anybody has any questions, otherwise let's go back here. And the usual wiki chop, cheese grater stuff going on. And oh, how did our oil trade go? Our oil trade is going just deliciously. Do you see that? Now we can move this into break even, and we can take this trade and go to like array. Take those highs out. I'll go right in there. So this now becomes a stress-free trade, and I'm looking for like array to like array up here again. I may not get it. It may come back all the way back in here. And now that we've taken something out here, I've only got one, so you could pull your, let's do this one. Let's just do the very thing I just showed you guys. So let's move this to 50% now. Okay. Because I've only got one on here. So that hits 70. Watch this. There's 70. Now I move to 62%. There's 75. Move here. Now 80. I move to there. Now if it comes back and takes me out, or if it hits 88, there's 75. Just watch this trade. So there's your optimum trade entry drill. There's a little fair value gap sitting right here. So you'd pay yourself right there. But because I've only got one on here, you trail it all up. So if it comes down and taps me out, I'm okay with that. I've caught a huge run back in that range. There you go. It's out. That was a quick trade off of a reversal. I hope you got to enjoy that one. Now, if this comes all the way back down, you'll be like, yeah, man. Yeah, man. You caught it. The reversal. Like the optimum trade entry reversal. Right? Right at the optimum trade entry between 62 and 79%. Now, if you had a whole bunch, you would be paying yourself on the way up. Anyway, you get the idea of what I mean by that. I'm glad I got to show you that. And yeah, let's get back over here to, thank you. Morning, Talk. Paul Ingram sneaking in again. Not for long though, Paul. Oh, that's funny. Well, hopefully you get to see the couple of little reversals there we took, like right away. They were there. So if you see them right away, then take them. They do work really nicely when you see them. They're a nice little setup. Good morning, Kitty. How are you? Haven't seen you for a while. Haven't seen you for a while. So we're kind of waffling. See how we're right in the middle of their two fair value gaps? And you look at this one, looks cleaner to reach for at least the midpoint between these two. And see how this reversal that we were looking at earlier did not manifest. We did not have a body trade below that level there. So it just came back in, filled it, and left. So we still haven't had a decent reversal yet. Though I'd like to see one off that high there. Now that we've filled the fair value gap in. So these are the key levels you're looking for reversals to happen on. So if it blows through here and takes this guy out, you got your entry on the order block breaker here, and you've got this fair value gap here. So we'll watch, see how that trades through. And yeah, you can get wicks going through. You need a body getting through that. You think that on NQ on the daily chart that it will hit 50% level of the order block? This one here on the NQ. In here, well, see how we got this, let me just make this a bigger one here. This is a good example of like array to like array, right? This was the reversal, and I explained why I eliminated these candles last week. When we were getting in on this candle here, and we opened here, I was just looking for it to trade back up into that fair value gap just to the edge of it and go. That's your reversal. Came all the way down, filled this fair value gap, went right into the mean threshold of this one. Look at that. Right into that mean threshold. We wait for a reversal. Now that you've taken out all of these lows, you wait for a reversal. So you see one here and there. So you see the body trades through it. We come back into it right here. So you can go long there. Stop losses down here. And you're trading from like array to like array right here. So that's the upside objective for me. Now that we've come back into it multiple times. Now, you have to be a pretty confident trader in like array to catch all of this. So unless you did the 50% of the range, and we start from here, and you do this is called buffering on a daily basis. So let's say you entered in right here, right at that 50%. The next day it came back down, you get squeezed a little bit, then it finally reverses, and you hit 50% right on the money, right there. So you close out 50% of your trade. Then it hits, doesn't hit 62%, comes all the way back down. You reload on your 50% that you took off there. You reload it on again, put your stop loss down here. It's like starting your trade all over again. Then it hits 50% right there. So you take off 50% of your trade. Then you take off 10% more. Then 10% more yesterday, 10% more. And you're sitting at 70% here with your you paid yourself right at 75, and your stop loss is sitting right here. So if it comes down and tags you out, you caught this on multiple times, you tagged it, and your upside objective is going to be left open. So if you paid yourself here, and even if you leave yourself below at 62% and allow that thing to continue running for a premium, that's where I think we're going. But anyway, so I think the mean threshold of that candle is definitely a draw. It's the breaker, right? We have a swing point and the run down, taking out all these lows, that breaker. So we're just running up into the breaker right now. We tapped it and we did not snap off of it, you see? So I think we're pushing for higher. That's my slant on it for what it's worth. Ah, look, see, we have a reversal right there. But we're looking for, this is NASDAQ, right? So yeah, we're looking for upside. Don't buy every reversal you see. So if you got two in a row like this, take the discount one, not the premium one. Because you got to look at the small range that you're in. You might have bought that and said, I'm going to go short now, and it just ran right through you and took your stop loss out. Look at the two, you got two in a row. Take the second one because it's the discount run. And you'll hear me say when we're in these little ranges that if you want to confirm a run below or a continuation on the downside, the discount array must be taken on the downside, come back in, find some support at, and continue through. If it's just one, different story. So now we're pushing higher. There's the 79%. So you'd be like moving your stop loss up to 75 right now and hoping that it wouldn't come down any further than that, and just keep pushing higher today. So if you're chasing that up with your 50%, your same technique that I just did on the 1 minute chart, you do the same thing on the 1 day chart, then you paid yourself again right there. That high we just took out here is another level you pay yourself at. So you'd have 50, 60, 70, 80, 90% of your trade would be off, and then you leave the rest. If you're doing 10%, as soon as you get 50, take off 50, and then let the rest buck. Let her run. So you know, you're going to see it run right up into here. It's totally going to nail that. Totally going to nail it. So what are we looking for next then? If it hits it, it's a key level we're looking for. So the mean threshold of that order block. Also, like array to like array, we're into the premium level right now. So if we tap that, We are looking for the reversal to occur at that key level and this key level right here. Right at 88 on the fib tool there, which is pretty much the mean threshold, this old high here. So look for a reversal here. 10 o'clock would be nice to see this run that high, reverse and come back down into this range. Because then if we run back to this order block here and then continue to the upside to take out these old highs, that would be ideally what I'd like to see. So just prepare yourself at any point. We're into the breaker now. So low, the open, and this here, there's 3 levels that we're looking for. 4, 5 levels we're expecting swing points to happen on. 1, we've already passed that. 2, we closed that yesterday. We opened that today. 3, 4, 5. So there's 5 different areas that I'm looking at. Now I'm down to the last 3. 1, 2, 3. So I'm looking for reversals in any one of those 3 levels. Life is busy with the family, and I had a nice vacation back to trading and learning. Good for you, Kitty. Where'd you guys go? You on a nice, did you cruise somewhere? Did you do a little beaching somewhere? Hiking? I would show you what I mean with my charts, but I'm on my phone and on my way to work. Just mark it on your, take a picture of it before it gets there, Tommy. Like do a screen capture on your phone, and then you can upload it later on, and we'll have a little chat. I'll be on later on this evening. I'm always on before I go to bed, and we can have a chat then if you like, and look at your charts and bounce your ideas. You went to Mexico. Oh, good for you. It was around 18,300. Yeah. Yeah, you're looking for this order block right here, Tommy. And you're right, that mean threshold is one of the 3 levels we're looking for. So 1, 2, 3. Look, those are the next 3 levels we're looking to see a reversal at. It could, but don't forget we've got lots of equal highs sitting up here. There's a ton of liquidity sitting up here right now. So we may just blast right through this. If I was just trading array to array from there at 17,437, and a full fill of that is 18,005. There's over 1,000 handles. I don't know about you guys, but 1,000 handles over the course of 1, 2, 3, 4, maybe 5 days, a week. You started bragging on Facebook, or you tell them old, hey, or X, that you just made 1,000 handles this week, people are going to say you're full of crap. There's a perfectly logical array to array run there, and that was worth over 1,000 handles, like 1,100. Okay, so we still might be getting this first one here. See this happening here? So just watch it. All these different attempts to try and get down there, hey? and they just get rejected. We have much higher to go. So with that kind of objective, I wouldn't be rushing to try and catch a quick reversal. I want to get a confirmation. So you have a trade, a nice displacement candle down, like says, I'm heading down now. There's a distinct break, not like this little wick, little slowly work its way through. You want to see a distinctive slam down, preferably taking out this order block, full body all the way through here, close, come back up inside this, and then come back and revisit that later on. And where would you aim for? Pull your fib tool. Oh, you'd have to start from here, I guess. And if you start eating through this, then pull your fib tool to the bottom. We're 9 minutes into the opening bell. Quick, quick, quick. See no bodies getting down there yet. Did you go to the west side or the east side there, Giddy? Tulum or Playa? No, Playa de Carmen's on that side. Puerto Vallarta is on the west side. It would be a nice one. If you want to keep in line with a run up into the, I'd like to see this reverse, start coming back down into this level here, off this fair value gap, and then get a bold candle down, and then start running back up again. The higher prices. I like the Thursday, Friday. Thursday would be a nice little reversal. What do we got here for 5? Today is a swing point day. Today's a swing day. This could be a big run up day today. We might see this afternoon as our reversal, a significant reversal. I want to see it get up into here though. I've said it multiple times. Cancun, yes. Cancun's awesome. Did you go to Shellha? I think the kids, when you take the kids to Shellha, that's a nice little water park, and do the little float down the river through the reeds. Then you go to that little suspension bridge or a little rope bridge that everybody tries to shimmy across to get to the other side, and you'll see people getting flipped off of it. There's monster fish they got there, and if you actually look down in the water when you're going down that little river, and you look down, you just see there's a whole blanket of jellyfish that sit on the bottom, and they just look like these really cool, like orb lights on the bottom. You stick your face in the water, they look really cool. So now we've got a body that traded below, trading back into it at the order block. You want to see this start coming back down now. Let's take that one. Oops, I don't want to go that quite that much. Well, we've got something to take off anyway. I wasn't expecting to put 6 on there. So we're going to counter trend this for a little bit. Mind you, it's 1:45. What am I doing? Just wait till 10 o'clock, Darren. Take the loss. Wait for 10 o'clock. What am I doing? Silly bears. I don't want that staring me in the face reminding me. Jump the gun. Just wait. And you don't want that much on there. Keep it simple. Why this afternoon? Well, if we have this, I'm thinking about if we have this continuous drive up this morning and we get into this afternoon and we start hitting inside this inversion, either hit that or here, or if we push up really hard and clean the tops out today and then get the reversal. So it's all either dependent on this morning, the push up, or this morning to run back down into here. Then this afternoon, you start running to take out the morning's highs and push higher. Like we could just see a reversal here back into this order block, or sorry, this fair value gap here. And then lunchtime, start running for the highs that were created this morning. Start to take this lot out here. So there's two different objectives or two different ways we can kind of look at this. One is it can continue pushing just higher all morning and all day. It may run even into the afternoon. If we're just doing this really slow, insidious kind of climb up, it may just take all day to climb up there. So watch this. See how we're starting to get a body. There's a body traded above this now. So I would have been, my stop loss was sitting here initially. As soon as it popped down into there, that's the only opportunity you'd have. Otherwise, your stop's going to get taken. Wrong time to go, especially when you got a bullish trend that's saying, hey, look, I've got an objective. You've been talking about this objective. Why are you counter trend trading this, right? You're just trying to catch her. What would it be that I would be aiming for? What specifically would I aim for? Well, you've got the mean threshold of this candle held. That fair value gap's been run through already. So that's a logical place for it to come back to and continue higher. So it's not always just the inversion. Look for the order block. And if this was open, it'd be a different story. I think we would have run back into here. But because that's already been taken, what was this here? Just out of curiosity. 62%. Take it easy, Paul. $7.90, yeah, this would be nice. But the way this, I was hoping that we get this, Mohammed, when we opened yesterday. I was hoping that we would just hit these equal lows like that and then just reverse key off of this and then start pushing back higher. But we didn't. We just got intentions of driving up now. We've got it. So when you see that acceleration and it's ignoring this return to it, so this is all in the cards for later. So like array to like array, and then I would start trading from that like array all the way back down into this one and this one, or the next highest one here and here. So if we get a reversal back into here, I'd be aiming for here. And if we get one into the summer, we're starting to look for new lows going into July, August, as the seasonal tendency would have. So here's May. We're in the first week of May. Then a run back down into the second week. So we're starting the second, well, we haven't quite got it. Well, by the end of this week, we should be up here. Then next week, we should get this up and down stuff happening, where we get a retracement back down. That might be back to that order block. So remember, see how we saw this? Look at this. Look at the chart that we've got right now. If we get this run back up now into that reversal pattern that we saw earlier, and we run through it, take out the highs that we're expecting right here. So we're running back up into that, take those highs out, run all the way back down into that old high here. That order block that you were just mentioning, that breaker, Mohammed, right here. If we come back into that breaker, then run back up to the highs, come back down into that little fair value gap that's just above us, you'll see. And then run all the way up into the first week of June, make new highs, and then start to run down. So that's, we're looking for the April low, which we saw, and we're looking for the first week of June high. And May is back and forth. Just clearing out old highs from April. And that's not a for sure thing, obviously, but it's something to kind of keep in mind. So if we saw that run back into here for next, or for here, we'll be up here, back into here next week, run back up for equal highs again, run back down, and then from the second or the last week all the way up into the first week of June to start running higher. So you have that like array to like array, like array to like array, and then shoot up into June. So that, to me, is like this consolidation you're seeing here. That's what I'd like to see happening there. In terms of, it looks like it's lining itself up to give us that kind of May. Anyway, what do I know? We're just hopeful. So if the stop loss was sitting here on that one, we'd be killing it right now. But we traded above here. So that's one of those, yeah, I don't like it. Wait for a different setup. So as soon as you see that thing take that one out again on the downside, then you can trade back into this, get short from here. And I'd wait. We're just going to wait till 10 o'clock, see what happens first. No rushing in. Hello, Jonas. Thank you for asking. I'm very well, thank you. Didn't sleep at all last night. I was up at 1 o'clock, again at 2:30, then again at 3:30, and I just went, forget it. Came downstairs and traded some Bitcoin. There's some nice little trades last night. Lows are taken. So if you're looking for an objective, let's say you are looking to get in on that, and that was, it just ran down to here, popped up, gave your entry, you'd be running for these lows anyway, and that objective has now been taken. So the only other objective to reach for is these deeper ones down in here and order blocks here on the tails of a potentially bullish run here. This could be just running down to take trailing stops to go higher. Right back up into that order block here. It's a breaker, really. There's a swing point right there. Swing here, run up, take out that, at least that little high there. Don't know what's back there. Trade through it. Rejection block, all the way through, back to order block. We'll wait for the 10 o'clock silver bullet. So if we can catch a nice run. Could you check the DAX or the DE40? It seems it will crash down this month. The DAX. DAX futures. Which one do you want me to check, Christoph? German announces it will send 35,000 troops to Ukraine. The new theater piece will begin shortly. The end of Europe. Which one do you want me to look at? The German one? I guess it doesn't really matter. So making a new high. That's the 1 minute. Let's go on to the daily here. Start off with the daily. So we have a swing, fill, like array to like array above. You have a reversal right here. Trades back into it right there for a short for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 days. Nice little price and bounce to aim for down here. And then you got all these things down here. Once they're taken, rejection block. Always pay yourselves at rejection blocks, man. So if this runs to take these highs out, look for a reversal and then look for a breaker. If you see this start to slam down, you may just see it slam down here one time, pop up, grab this, and then just exit and start running for deeper retracements. If what you're saying is true. Or I shouldn't say it, not if it's not true. I'm not calling you a liar. I'm just saying if it's the doom and gloom you're expecting, or their analysts are expecting, you look for a sharp drop down and perhaps one opportunity off of a breaker to catch that. So it'll be a quick snap up, catch a breaker. If not, the swing, catch the mitigation block, and then continue down further. Like there might be one slight opportunity in here, so you got to be really vigilant to watch that. May, all will be deployed. So right off that order block here, we're getting that reaction. So see how we've come back into that one more time here. Body trades below it, come back into it. 2 minutes ago while I was talking about DAX, nice place to catch it right there. I hope some of you guys caught that. And you're running for this, just these equal lows here. And this may be the nice beginning of the run down now. And there's your silver bullet entry. Nope, not right there yet. But the first fair value gap inside the range is always a level of interest. 9 o'clock open. Few more minutes. You see the 20th they're going to deploy. Guess what's going to happen to this? See when we pulled that fib tool on this one on the way up? Look at how much it's retraced already. And that's where we caught it up to here. So if you remember, we're saying from like array to like array, there's the like array right there. And you're gonna see it. It's up to you guys to decide how long you want to see it for, or how valuable it is for you guys. But I want you to see how fantastic it can be, man. Body breaks above, literally come down, tap it. That's what this thing you want to look for. Remember when I was telling you about, you want to see a reaction off of it and go. It comes back, taps it, and just leaves. Not just wandering around in here. That's not a good sign. You want to see this. So when you put your stop loss down here, you see that just take off and clean that high out, right to break even, start pulling your fib tool on that. So when you say like array to like array, then start going from like array back to like array again, down here that initiated the swing. And you pull your fib tool on this, instead of that range this time, you're going to put it on this range. So you're looking for this type of thing to happen. Same thing we did on the way up. You catch this 50% here. You pay yourself at 50%, move your stop loss to break even. You wait, hit 60%, now move this to 50. Stop loss to 50. You wait. So take 50% of your trade off there as an example. You take a 10% off there and you're sitting at 60. So now this is the optimum trade entry. So if this ends up going higher, this would be the optimum trade entry you're capturing to run higher. And you're catching a potential swing here. See how this is starting to form? You're already ran a low out. So you're looking for these kind of things. If it doesn't even reach back to that, that's okay too. I just look for the opportunity to see a swing point happen. So as soon as that hits 70, you'd move to 62%. Now, if this whole war's, if the Germans send over some people to Europe, you're going to see gas prices or oil prices starting to really run up, because this is where we have that Michael was mentioning about $175 a barrel. You may be catching a $100 run here. Not that you would catch it. So there's 75. So you move to 62 right now. So if it takes you out, you literally, and you pay yourself right there, one little piece there. And boop, you're out. So now if this reverses from here, that's still open. You're into this one here, this one here. So you may see a return to, see this little tiny high here? Body trades below it right here. You trade back up into it right there. Take out that low. If you miss it, you wait for it to return back to this order block. So look for this order block here to provide you a level of support, either right inside that fair value gap or anywhere inside that body. So you kind of draw that out and have a look there. And if it doesn't, it continues down, you would have been out of your trade right there. Paid yourself perfectly at 70%. And if it keeps running back into here, that's the difference you would have lost if you do the trailing method. It's a really quick, easy way for people who want to protect their money real fast. And you don't want to lose your money quick. It's definitely not a method that Michael teaches. That's just a method that I like to use sometimes. So I'd like to see this now get through here, through that order block. Just because we have one going this way and one going that way, you're in a small little range here, like array to like array. And so I want to see that one get blown out with a big bold candle through here, come back, find support at this order block, or at least dig down into here again to go higher. If that's it, if that's a full optimum trade entry. Institutional order flow entry drill right there. Not saying we're going to go long there, but we captured that on the way back down for your take profits. So if it does reverse from here, you really maxed out. And no decision, this decision that you make here, this tears all the way through this. You cannot beat yourself up on what happens next. That was a logical place to start taking your trade out. You made some money, you put it in your pocket. It's not like that was the only thing that ever was going to happen in the charts today. Anyway, let's get back over here. So we came back to that order block again 2 minutes ago. I missed it again 2 minutes ago. Order block, continue down. Good morning, Fernando. That Christy Noam, man, is she ever getting a lot of flack over shooting her dog? Trying to play, trying to make the tough decisions. What? Your dog didn't listen to you, so you shot it? Politics. Gonna draw these out so you get an idea what they're looking like. That's what you want to see. Give me a big displacement candle back up past this. No wicks. Just give me a full body up there. You like your cheese grater coming up again? Let's look through some of these other ones here. What's Dixie doing? Still sitting sideways. Small little range here. I was just stuck in between, wedged in between the weekly and daily here. What's the high on that candle? 7845. And the close on this candle, 7845. So if you get one that runs through all of them, you don't get a chance to get in on them. Take the second one, or the body, if a body closes below this. Second one, nice entry there. Still doing nothing. It's finally climbing up out of there a little bit. Again, right back up into, I don't know what that was. Oh, it's the last piece of this. So it just came back up and filled that fair value gap here again. Came all the way down to that like array again. We did not get a reversal here. Continuation, all the way down from one to the other. Went from here up to here, then from there down to there. It's a full fill of that fair value gap down here inside this inversion here. I'd like to see it dig all the way down here one more time. So what you want to see now is you see it come down into here. Trade back up, come back, find support at it, and then we'll catch it long. You want to see a confirmation of this support wick down in there. Like we've seen lots of times before, where it just like this kind of thing here. See how it just wicks straight up to the top of it? You want to see that kind of thing wick down to the bottom of it, come back up, find some support. So once it's done its thing, high, low, or medium, sorry, medium, you have the high of the inversion, you have the consequent encroachment of the inversion, and then the low of the inversion. Those three hallmarks of the stepping down. So you'll revisit it once, revisit it twice. The third time it revisits it, you're expecting just to see that level get hit like this. 1, 2, 3. You don't want to see high, 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 back down into it. You don't want to see all that kind of stuff. This stepping down just kind of tells you that there's more weakness as it starts to degrade down. I look for this kind of thing happening inside order blocks as well. So I look for the high, the mean threshold of an order block, and the low. So if we've come back up to the high and you've tapped the mean threshold, and the next one is tapping the bottom of it, and you're seeing this slow degrade down, especially if it's a breaker, then you go, I like to see that order. So it's hit the top PD array inside it, the middle, and then the bottom for further continuation. Something just kind of look for. So that's what I'm looking for down here. If you don't get it, we're looking for, oh, we've already got this right here. See how the body's already traded above it here, and we've come back and tapped it right there. Now you're looking for more upside. So now that guy's off the table for the time being. Look for inside this range. Pull your fib tool inside the range. There's 50%. Move yourself to break even, which is like pretty much right there now. That would have just tapped you out there. So that's where you have to ask yourself, was it really worth running from this PD array, or this one here to this one here? A little tap back, 50%. Now we could get a continuation on the downside, and you can also get a continuation running up into this area right here. You want to play in small little consolidated areas like this. You don't wait for something big to happen. Reversal, nothing. What's silver up to? Silver sometimes gives us a nice little reversal too. Reversal here on that swing, taking out these lows. Body trades through it. You have to decide what you do here. If that trades through that and it wicks all the way down, you say, it's going to take my stop loss. Then all of a sudden it goes all the way down again. And you think, oh, it's traded below it, I'm out. And you take your loss. Then all of a sudden it reverses on you and goes all the way back up. That's one of those ones with the fail-safe. Wouldn't have worked so well for you. Because you'd want to see if that was your entry right here and it traded below, you go, oh, I'm on the wrong side of this. Doesn't take your stop loss. Doesn't take your stop loss, comes back in. Then you get yourself out and you say, now I'm waiting for a better setup opportunity. I'm waiting for this old high here to get, or this order block to get taken out on the upside before I'm committing to going long again. And then the only opportunity you get is this reversal here, or this high here. And you'll be looking to get back into here. You don't get any one of those. You get nothing on this one. This one here. You have to decide how you're going to manage that. Your stop would not be taken unless the spread opened up and got you. Like array to like array. That's where you want to aim for. Or down in here, we got a swing. So you look for, let's just look at this one here. There's the swing. You come back inside, oops. You come back inside it here to go long, taking out highs. Pull your fib tool from high to low. You would have paid yourself at 50%, moved to break even. 62%, you finally would have hit up there, moved to 50, and then it came back and took you out, and you got the full range of what that ended up taking. You paid yourself at 60. That's all the extra you could have lost there. Not like you were aiming for that anyway, but that's using your fib tool to get your profits, and it comes back and cleans you out. So all this profit here, so if you took 50% off there, 10% off there, it came back and took the last 40% off in some decent profit right there. So inside this range here, if this is the reversal and you can't catch it, you look for this order block to get taken. It takes it right. Oops. It closes it out there, comes back in, gets you in short right there. And where are you aiming for? There's 50%, 62, 70. And then it would have come back and taken you out if you were following it back that way. You see how it came all the way down to just short, or right onto the 79% right there. Then reversed on you. So even in these little small ranges, you can still capture these small runs back in, give yourself some profit right back to a breaker here. Reversal here. Let's get this one out of here. Body breaks below it here. You trade back into it. All three levels would have been hit to like array down here, here to here inside that deeper range. You could be paying yourself at order blocks and imbalances if you want. But if you just went from array to array, right in the mean threshold, see that? Or consequent encroachment. Small range, but palladium, even in the little obscure thing like palladium, you can still see setups happen. I think I gotta go NQ and YM too high to buy. It does not make sense to me to buy it and do not have the sale set up. I'll come back in the PM session to see if it gets that market. Good idea. Good idea, Mohammed. It's good to walk away from the charts, man. Good for you. It's a good thing to walk away from the charts when you can see your setup happening. So that whole array, like to like, body traded above it here, come back inside, go long into this one here. You're inside this small range here now. If you pulled your fib tool from here to here, and you caught this entry here, 50, 62, 70, 72. So you could have caught all the way up into here, would have came back down there, come back down, tapped you out there at 70, 62, but you would have been paid at 70. So those are the differences between what you captured on the reversal till it came all the way back down again. Oh, there's Derek. Good morning, Derek. I was just going to say, where's my buddy Derek? Working at the golf shop early this morning. That imbalance sitting right there. Let's look at this here. Price imbalance right there. See how we're just banging on it? Now you go down into a 5-minute chart. See how we ran all inside it here? We ran to the low, the high, all the way through to the bottom, back to the top, into the mean threshold, consequent encroachment, and now we finally broke out to the upside. Interesting. Nice revisit. That may be what we see for continuation to the upside into this fair value gap here. Is there any imbalances in here? I think you pointed this out the other day, Derek, didn't you? It's like we're just crouching here now, just sitting here. There's nothing in here that really supports price staying here. This is going to keep pushing up higher. Too much chop to play in. Morning invest. No, today another close day. So 4:30 to closing. 7-ish. I have traded like a true professional today. I am done for the day. I'm ending the day up 2.3K. Tommy, that is amazing. Wait till that translates into the real dollars and you don't have to go to work anymore. That's awesome, buddy. Good for you. Good for you, man. Just keep focusing on those rules, Tommy. I can't wait to see the day that you just... I can wait. No, I'm not going to rush you. I can wait. I'll be excited when the day is that you just start making a living off your computer. Go out there and enjoy your life. You've had a very interesting career or a very interesting life. And I think if anybody deserves a break, it's you, my friend. So I certainly do wish you a continued success. Just rinse and repeat that same formula. Don't let the 2.6K or whatever it was, 2.3K get inside your head. And I know it wants to, but just keep focusing on that trade, that setup that you just did. You just keep focusing on that. Rinse and repeat that same thing. Don't expect anything but what you just saw. That's not a rare thing. That's not something that would happen once in a while or only once a year. That happens all the time. So 2.3K is huge for you. Huge for you. So good for you, man. Well done. Just so proud of you, man. You're doing so well. You're studying charts, you're asking questions, and you're going to be David's another good example, and so is Simo, Lambo. All these guys are really good examples of people that are asking lots of questions, studying, putting charts up there, getting other people's opinions on stuff inside the Telegram channel. And you guys are getting some great feedback. And I can see this. There's growth. You guys are getting some honest to goodness growth. And it's It's beautiful to see. And I do appreciate Derek's help. He helps out in the afternoons, does his show in the afternoons when he's got time, which we're all really grateful for a closing day, the close of the day, the macro, and just helping out when he can. I appreciate that, Derek. I really do, buddy. Thank you. The community appreciates you for sure. So if this is the first fair value gap after 10 o'clock, see this right there? If you think, oh, it's coming back inside that to go long, and then all of a sudden you see it close through it, you go, that's not a good sign. Fair value gap that closes, then now it becomes inversion. And inversions are strong for continuation, and you're up in the premium portion of that range. If you wanted to go higher, you want to see that close up or inside that fair value gap there. So as it was, if your stop loss is sitting down here, you would have got munched. Yeah, it's awesome to hear his confidence getting stronger. Hey, to me, the words traded like a true professional are key thoughts, not the 2.3 money. Ah, yes, Derek. As we detach from money and focus on the process, we become winners. Thanks, Steve. You've got a great thing here. Happy to help when I can. That is exactly it. Don't focus on the cash. Focus on the creation of the cash. Repetition is the mother of skill. Jesus, I sound like the devil there. Repetition. Repetition is the mother of skill. Rinse and repeat over and over. See your setup. Take your setup. Be patient to wait for it. And the discipline isn't just simply the entry, it's also the exits. For example, if this was the reversal, you saw this high get taken out here, right? And you saw this reversal happening, and you saw that fair value gap become an inversion. You think when it trades back into that, here, here, and here. So here's where your discipline has to really come into play here, because you have 3 potential places to enter, right? 1, 2, 3. You know this one here is the important one, because if it trades above it again and closes, then you can get out at break even and you'll take losses on these 2. You have a fair value gap above you. You have an order block above you. So there's levels that this could reach for. But if you're disciplined to say, no, I will not accept anything above here. I want to see that stay open. Tap it and continue on. So let's say you miss this and you say, all right, as soon as this order block here is taken out on the downside with a body and we trade back to it, I'm going to get short on that. So there's a body, it takes it out here, and then it runs all the way back up inside it. Now you get short and you go, as soon as these lows get taken, or the mean thresh or the consequent encroachment, the rejection block gets taken, I'm taking off money here and I'm moving to break even. So as soon as that enters in right there and comes back to the rejection block right there, you pay yourself. And it comes all the way back up. You break even right here, and now you're still in profit, going side, back and forth, and you're still bouncing off of this inversion here. Now you're bouncing off of this little guy right here. So if I move this one here, over to here. See how you're bouncing off of it there? Now, if you take these lows out, you pay yourself again. Have the discipline to do that. If you don't, and you've been aiming for down here, then that's fine too. I got no problem with that. Just sometimes when you're in these consolidated, choppy environments, do you want to wait for that? Michael may go, no, this is way too choppy. You don't want to waste your time in here. I'm saying if you're in this kind of chop, pay yourself quick and get to break even. If it comes back against you, who cares? Who cares? You nibbled some money out of the market. And you move to the sidelines. Look, see, it took the lows out right there. Bang, you pay yourself right there. Now, if it just cleared out these lows, where's the next objective? Take out these highs. Inside this choppy consolidation, it just cleaned out lows, engineered some liquidity here, come back up, take this little piece up here, yet to fill. There you go. Done. Downside, upside. Now your stop would have been taken. And all that you could have just took off of that order block, paid yourself, and that's 199 or 200 to 186. There's 14 handles and 15 handles right there. Anyway, you get the idea. That's the discipline you got to have to be able to say, I have to force myself not to aim for here. Where's my low-hanging fruit? There's a basket of cherries here. Right there, you just keep dipping in and grabbing your cherries as you go. Then you scoop up the last one and run for it and move to the sidelines because you're in a consolidation. You're in the discount part of this consolidation. Look at that, body traded above it. You come back to it. See that? Right there, there's the reversal. You tap it, continue up to premium rate. That can come all the way back down and tap here inside this consolidation cam model 1 entry, all the way back to here. Right there. You want to see that mean threshold hold right there? And then start leaving. Let's leave this open. Fernando, yeah. You're really learning, you're really doing some great stuff too. I love your charts. Now, how many times have we showed you like array to like array today? Like Michael says, it never stops working, never stops happening. Over and over again. Let's do this one. Yeah, it's gonna be like a 1-to-1. Oh, we're at 50%. It's still come down into here. I'm going to leave it here. I'm chasing it up before I should. Because I got in just below the 50% mark there. But that's all it needs for a full reversal back down. That's a nice snap off of that. Cam model 1. Okay, well, that's bumbling around there. Let's have a look at what's happening over here. Like array to like array, remember? Here, all the way down to here. Finally ate through it. Nice. Another example of array to array, then array to array again. What's Bitcoin up to? And that would have been nice to catch that right here. Body drops below it here. Trades back up into it right there. All those candles, and then ba-boom. Right here. Like array to like array. Right there to right there. So see how this one trades below, pops back in, trade back to this guy here. And then the same thing again from like array to like array. Here to here. Fill. Body drops down below it right here, and I don't know if you catch it right there or not. That one actually trades below that low. This one here I don't think pops up high enough to catch it, but you start running down below the lows, look for this one here. So like array, body trades above it, you trade into it here to like array right here, all the way back up to the top. That's why I like Bitcoin, man. It does. I wouldn't buy Bitcoin, but it certainly has some very interesting parameters you can trade. So now I'm going to move this one into 50%. Didn't quite hit 60 or 70% there, and I only got one on there, so but it hit the array. See that? I had it a little too high. That's okay. Came back, took me out at 50. But like array to like array. I think that's the theme of the day. Like array to like array. These guys are hear me saying it all the time on a Telegram channel. I post tons of pictures on there from like to like, and it makes you wonder again when we go back to this daily one here. You saw me put premium and discount here. That's the objective you're looking for. And we're so close to tapping it now that, you know, you gotta believe it. You gotta believe in miracles. You gotta believe in miracles, man. Oh, we got the electricians coming in today. Woohoo! The boys are gonna be busy. So there you go. Now it's gonna run up there and would have taken my profit. Come on. Just tap the top of it just to make me feel like I'm not talking out of my behind here. Well, we picked up another subscriber today. Welcome, whoever you are. Welcome, welcome. And if you like some of the stuff we've done today, then hit the like button. You don't have to. I know that's a very personal thing for some people. Some people just do not want to hit our like button. See how we're still short of the. I had my stop. I think I have my take profit right there on top of that 12.13. I think that just hit 12.75. So it still wouldn't have taken my profit, but I think that would have been the 70%. Yeah. So 62, or was it 50? There you go. Now it would have hit it. Finish that fair value gap off now of 75. Oh, sounds like the guys are here. I'll be right back.
Hey, how are you? How are you, Darren?
Yeah.
Nice to meet you, Colin.
Colin, pleased to meet you.
How you doing, Jeff?
Yeah, pleased to meet you.
I just said to Jeff, I was like, I don't, doesn't look like anyone's here, and then you open the door.
I can hear you coming from in my office. I can hear you guys talking outside. Well, they're there. So do you, did he tell you what's going to be done, or?
Yeah, pretty much. Got a pretty good idea.
or anything like that?
Oh, I-
Machine here, you can just help yourself. Okay.
Okay. Let's get back to it. All right, so now we've seen that there's this, we got the reversal there. Oh, that's good. We've hit the new highs. Rejection block, that looks good. We've eaten through this fair value gap here. Body closes above it. We come back, find some support. Yeah, this is all good. This has given us our continuation. I think I like that that run higher now. Talk. Thanks, buddy. Caught that move up as well, entering at 18,203 for 10 handles. 18,203. So you caught it right in here. Nice. Good one, Russell. Target 1 minute fair value gap. That's awesome. And now you've got the rejection block. You want to see this come back into this order block here, which it's close to doing. Keep your eye on that one there. This little swing here. Some people might argue it's a mitigation block because it doesn't take out anything, doesn't take out the significant low here, reverses and comes back up. Some people might say, well, if that's a swing point right there, then that would be a breaker, because we did take, there's a swing point here as well. Anyway, look for this mitigation breaker. I don't care, whatever you want to call it. We're looking for a return back into here. Give us our support. And this may be it. This would be the run for the day. If this takes off now and starts running back up into the inversion up above you, you caught yourself a little tiger by the tail right off of a reversal. These guys sound great. Got a couple of electricians in here trying to rewire a bunch of stuff, so it's gonna be good. Long from 18,201, expecting to take profit 18,236. Oh, you're taking the highs there. That's a good one, Talk. Now that you're in this, you can either manage it from the back end, Talk. If you get above this, if you see a big bold candle get above that, you can manage it from the back end, because we're still aiming for this objective up here now. So if that ends up starting to run, you could just keep your take profit up higher and manage it from the back end. Bring your stop up to here. I don't know what your profit or your take profit is, or your how much leverage you've got on that. If you're just aiming for the high, nothing wrong with that. You've got a high right there. If you're aiming for 236 is your stop loss. Are you managing it from the backside, or are you just running for the front end? And there's nothing wrong with that right there. Bang, you got it. If you manage it from the back end, then you can allow the front end to run further for you. And if that's our objective, then kind of give it some room to run. And this order block, you want to see this holding price now. And that's it. So I'd sit right below here. That one's definitely a breaker. Takes out these lows here. So you want to see that one provide a level of support. Mind you, this is all a breaker in here. Michael will go 1, 2, 3, 4, 5, 6. That whole thing is a breaker. So pay yourself at that piece there, leave a piece on to run higher. And you want to see this one is the breaker. I like that first candle. And you'll hear Michael say, well, you know, people who take the first candle don't know what they're talking about, but it's all the candles. Well, he has taught one candle and he's taught all candles. For me, I like the first candle. Not that the all candles aren't wrong, because they're right. I like the first candle because that's the area of sensitivity. If I start to lose that, then you start to go to the midpoint of all of them. So I take the first one and then I use all of them as, if I start to eat through the first one, then I take all of them and I add them all together and I look at the mean threshold of all of them as one giant breaker. And as you can see, the body closes above it, come back, and you tap the first one. And we continue on. Nice and clean. And our objective is right here. My take profit now aiming to take the breaker or the inversion fair value gap on the new entry, aiming higher. Couldn't maintain the trade because I was too low to move my, or too slow to move my take profit. Yeah, I was hoping you could manage that from the back end and just kind of use your fail safe to follow up behind each fair value gap that you have. Follow your stop loss up behind it, because now you're looking for any potential reversal. So if we get a trade that trades below this right here, a reversal, then we know we've got a potential for a run back the other direction. So I always kind of trail my stop loss up one fair value gap behind. So that guy right there, if that one ends, then my stop loss would go from here to here. Unless you're pulling, you just leave it now and just let it buck. And just say, leave your stop loss sitting at break even and let it run. And if it comes all the way back and takes you out, then it takes you out. It's not like it was the only trade available, but it is a beautiful opportunity to go higher. I love the way that we keyed off that imbalance right there. So here's the 11 o'clock. We're coming up for, we're just 1 minute away from 11 o'clock. Come on, slam up there, hit this level right here, and then we can see a retracement back into 60% or 50 to 62% of the run created from the opening from 10 o'clock to 11 o'clock. There's the 11 o'clock hour. I would just take a trade off right there at 11 o'clock, a big chunk of it off there, just because 11 o'clock's notorious for turning around and coming back into a range. And it could be 11:15, whatever. You may not get your objective, though I think that's what we're going to get anyway. I'm still hoping for that as some vindication, validation of my array to array idea. Well, it's not my idea. Michael's mentioned it in the past. Like array to like array. I got that off of him. Look for the reversal. There's 11 o'clock. My door open still. You can do it. 295. Oh, we still got another 40 handles to go to get up there. Is anybody else in this trade? Anybody else take that reversal? Beautiful reversal. Look at that. Michael would have been all over that, especially that return to 50%. He's talked about this before, where it rebalances, comes back and just clips it and then goes. He'd be all over that. Like white on rice, he would be all over that. And that is a beautiful cam 1 model entry too. Those who take cam model entries, body breaks above, come back in, cam model 1, and off you go. So if you were taking a cam model entry or reversal model entry, or you just waited until the order block was taken on the upside, which is right here, roll back over, come back inside. You didn't quite clip this one, but if you looked at this one here and you ran through that right there and you took that right off the high, and we're still running for here. There's multiple opportunities to get in on these. And this, out of curiosity, I do like a good price leg when I can see them. Where does that put us? $71. Yeah. We're not. 51% will put you just in for a fill there. This is that 11 o'clock. This could be the potential reversal back into 60%, 50 to 62% of the whole range that was created. In here to here. So just kind of keep your eye on. I don't want to see this get below here. I'll like to see that stay open. You don't want to see that one trade below that and then come into it, because then you got their potential run down into here now. I'm all fidgety here. I have to go to the bathroom. I've drank so much coffee. I'll be right back. I'm in since 2020, 224. 224. Oh, good for you. So that's your level right there, Chris. You don't want to see that break either. You don't want to see it trade below that, come back into it. Otherwise, you're looking at 50% of that range. You want to see that stay open now. Good. Staying above that. That's excellent. See, that's staying open. That's what you want to see. Continue higher. I'm in, so okay, out at 1K. Out at 1K, you're not talking money, are you? You're just saying, I'm out at my perfect exit point. My trade setup was perfect. That's what I want to hear, man. Doesn't matter about your money. I know it matters to you, but did you execute your trade plan perfectly? Did you get a nice clean setup and a nice exit? Did you manage it well? Did you feel emotional about that? All those things you kind of want to document, right? You want in your trade journal. You want to know how you felt. Did you get that nice and clean entry? And the money, that'll take care of itself if you get your setup. I'm out. I had one contract for 25 handles, not greedy. Get what I am after and out. Good. That's exactly what you're after. Then you accomplish what you needed. And they gave you a monetary reward. How's that? You got to look at the money as, do you, as a reward for following through with your trade plan. And if you don't follow through with your trade plan, you get punished. You get dollar bills taken out of your wallet. Just follow through. Again, you don't want to see this lose here. There's a small one in here. Yeah, this potentially is the reverse point for a bit. I don't see any. We might see this drop down below here into a deeper discount and wait for a reversal to happen to go higher. We might get a revisit of these old highs here. So you're looking for another reversal pattern below these lows here. And unfortunately, it may take out this. We've got this one here. Body's respecting it. They can be really tiny too. No different than these little imbalances that you look for. And that little fair value gap right there. Trade back up inside it. Run back into fair value gap. Mean threshold. Look at that. Just rip right up there and stop right on the mean threshold. Now blast through it. Come on up. You got a little one here. Didn't take out a low there. Fill of that. So you're bullish when you're above that. You're between here and here. That one and that one. This order block and that order block. You've already cut all the way through that one to the rejection block. Come back into this order block here. Fair value gap. I'll draw them out here so you get a better feel for them. These were consolidations where you go above and below, bullish, bearish, till it starts to run out of arrays and starts to compress like this. And as it compresses, then it's got to take off or come shooting down. So you can argue both sides. So where should you be? In the middle of a consolidation on a bull flag? Interesting. We take this whole run. Just experimenting with something here. So we have premium discount. We have premium and discount premium. And what's sitting in discount premium? If we're in the premium area, bouncing back and forth, and we're in the midpoint of that premium area, if you want to get down into a discount array inside that premium portion, you got to get down into the discount premium in here. So there's a fair value gap below you, order block, and back to this breaker again before pushing higher. Good. I like to see people encouraging people. See it still finding support. The bodies are still respecting it. So you want to get down into this guy here if you want the discount in the premium range. See how it's just compressing and smaller, till it goes, oh, I got to go somewhere. Now they got to bust out, go up higher. I got to roll down here, take these lows out. Or if you're going to continue marching sideways, then you want to, again, take out, run back into this rejection block, extend, and still keep your range pretty tight. Just extend, take out that high, that low, then take out these highs, then those lows, and just keep it going a little bit wider, and then bang around inside some more, go wider, bang around inside some more. It's like a, it's funny how, you know, as a paramedic, we look for, if I'm watching an ECG strip, this is called torsades de pointe, twisting of the points. It's a like potentially lethal cardiac arrhythmia. Well, it is a lethal cardiac arrhythmia. And when you see this, it gets wider, then it gets narrower, then it gets wider, then it gets narrower, then it gets wider. It's a bad thing to see on an ECG. And this is what you're seeing here. I'm seeing torsades in the, let's see if it turns out the same way as your heart would be. Little mag sulfate. Sharp down move. Hello, Robin Hood. How are you? My knowledge showed me a down move. Chandra. Okay, so what made you think it was going down? You still have support here on the upside. You still got this inversion, this fair value gap has just been reclaimed multiple times. So the fair value gap provides level of support. So you still have to say bullish there. We've taken out that high. Now you could say, well, this could potentially go bearish on you real quick. But right now you still have to remain bullish because you're still above this fair value gap. So you got to remain bullish with a higher time frame objective still above you. that we haven't reached for yet. So I'd be interested to know why you thought that was going down. And that's not for ridicule or anything like that. I honestly want to know, where did you get the feel that that was going to reverse? Is it just the specific pattern where it gets smaller and smaller and then finally you get a break of a bull flag? Not quite sure where you caught that for a run, because you may be right and maybe just ran the high out first. But right now you still see this as, I still see this as bullish. And you're above this inversion here as well. See how we never took this one out with the body? Now you want to see it blast through it. Still come back, find support at it inside that other one. See this small guy here? Let me remove this one. So we came back, tapped it again. Took a long from 18 to 31, paid myself, might look in the afternoon if there's anything interesting. Yeah. So now, Chandra, you want to see this close below here now and get below here. If I see this close below that level right there, then I'd say, yeah, we're bearish. Then you could say if it closes above it, then you say, no, I'm bullish. This is when you're in consolidations, when it changes from bullish to bearishness. And you have one or two fair value gaps. You only have one fair value gap and you go above it, you're bullish. If you go down below it, you're bearish. If you're in a consolidation, you shouldn't be trying to trade that anyway. But if you have two of them inside a consolidation, then you go bullish to bearish, bullish to bearish. And when the bearish one is taken on the downside, then you're more committed to a downside run. But you're still, there's only one here, so you're still bullish because you're above the fair value. You keep reclaiming it. So until we break this here and this here, you kind of look at this whole one right there. You break that to the downside, come back, find support at it. Then I'll say we might have a bigger, deeper dig into this range. Can you teach us how to take entries using paper money? Yeah, I did that this morning. I did a couple of trades this morning. I can do them on here for you if you like. I just don't want you to get hooked up on the idea of copying my trades. Because then you'll just focus on looking at the money that's being made over here as some sort of way to validate what it is I'm trying to show you. I want you to start to see how prices and actions going, because if I start doing all this trading on here on every little one, you're going to be focused on that little number over here and how much it either wins or loses. I want you guys to see where the potential entries are, and you decide where you want to take your exits. I just want you to understand how price action's working. I don't want this to turn into a channel where all you see is me taking trades long, and I've got my trades happening over here. What you guys see on here, it's just me talking through different places you can enter. But if you want to see a few of those, we can do some more of those. Fair enough. Yes, I understand. Thanks. You're welcome. See, this is just staying in price action as it is, as it's happening in front of you. And that's what you want to see, providing support. And that'll be our upside objective for that price leg that I was looking for. That'd be the first. That one to finish off. Then you only got another, what is that one there? 92, another 21 handles after that. Okay. More in the next 10 seconds on here. Still inside it. Still don't see anything in here that supports this as the swing point. So I'm still going to wait for here. If I'm wrong, I want to see this trade below this, come back up and get some support off this guy here. Just back into the mean threshold. I keep saying mean threshold, consequent encroachment of the BISI here. Run back up into that little imbalance right there. If you look at this as a little imbalance, trade below it, come back up inside it. Now you're going to come back down. That's the imbalance I was looking at here. So for here, if that's your 52, 52, 42 will put your, if you take this low out here, there's 10 handles. Want to see that level hold. If it's not, then we're looking for a continuation above here. I want to see this come down, take these lows, keep this open, then come back, take that out to go higher. Just give me a dip into here, come back up. And we really have overlapping. Mind you, this one's higher than that one now. So now this becomes a level of interest. And this one here. And if you're looking at the range you're in, premium and discount, just keep your eyes on these areas here. And we're in a really tight consolidation right now, so don't get your knickers in a knot here. Wait for a decent displacement. And we're into 11:30 is where Michael goes, he considers this lunch. So sideways. Take out highs or lows created before lunch. I still want to see this run up in here. Fill that. And then look for a swing. That might be this afternoon. We talked about that being this afternoon's run. And it looks like that's what's manifesting for us. It's a slow, we're talking about the slow, insidious grind up there in the afternoon, maybe the reversal. I think Muhammad was asking me that this morning about, see the support, fair value gap, ding, ding, bouncing off of it. So inside this range, you're bearish inside this range and you're bullish inside that range. So you're right in the middle of the two. So yeah, the bot, it's got to decide which direction it wants to go. There's 50% right there. So you want to get on top of this through the mean threshold of this candle here. Find some support on this and keep pushing higher. Four, three, two, one. There you go. Let's go on that. I'm just trying to key off of this inversion here. We've run all the way up to the 50% of that wick. And we're in a consolidation, so you want to protect your money real quick as soon as you can. I don't want this to come back past here. It's going to take me out. It's going to run these lows now. That's the problem with consolidation. We have now got a body traded below here. Yep. So where should I put my stop loss? Down here. I just didn't want to lose any more than 150 bucks. Stop loss is here. Give me an opportunity to get out right there. Or, sorry, where my original entry was right here. So you can cut your losses there. Again, stop loss is too tight. How many times have I done that? So now I got to get back up on top of here. See how you got a lot, they're kind of engineering it all flat down here. So now you're bearish between here and here, and you're bullish after that one. So you're in the middle here. You're going bear, you're going bull. Now you decide which one am I gambling on. So this one here, I wanted to go long because it took out the premium array to go long. Came back and then went all the way through it. It would have given me one opportunity to get clear there if I had my stop loss sitting below the low where it's supposed to be. That's not a failure of the setup. It's a failure of my stop loss being pulled too tight. So you got two arrays. You want to be above the premium one or below the discount one to go higher or lower. Great content as always. Thanks, Kitty. I want to see the rejection from the last up close candle, then a rejection from the wick. Yeah, you got a nice, Chandra, you got the nice, like, see that? 50% of that wick right off of it. Boom. Nice reaction. You want to see this kind of a swing. So now you literally are stuck between these two, that one and that one. That's where it's just kind of banging off of one and the other in the middle of the range. So this is where you kind of stay on price action, stay focused. Don't ignore this now and walk away from it and say, the charts are boring. Watch how price is acting inside these ranges, and you'll say, where do I want support now? I want to see this give way to go shorter, getting into that discount of the premium and the discount premium. You want to get down into here for that. There you go. Body's getting below it now. Taking out that low. You want to see that body close. Nice. Now, there we go. So when you're arguing over rolling the dice, am I going higher or am I going lower? Chandra said that I want to see it reject off that wick. It did 50%, perfectly rejected off of it. So if that's what you're looking for and you see it get below this chart here or below that candle and you go, that confirms my rejection off that wick. Good for you, Chandra. That's exactly a kind of signal or setup or signal that you want to see. Once you see it reject off of that there, you want to see it break below this candle here or this fair value gap. It did. Dug nice and deep into this one, came back, found support at it. Now you want to see it give way, and it finally does, breaks through. So if your stop loss was sitting here, you may be trailing it. Pay yourself at these lows. We've dug down into that premium or the discount premium array now. We talked about that whole range. And now you've got some bigger candles. See how it's kind of had to work its way out? Now it's finally busting out of this small consolidation. Back to CAM Model 1 entry for a short. All the way up to the body opening. Hello.
Hey, when you get a minute, do you think I could plug in?
Sure.
Oh, this is
I'll be right back.
That's awesome. Yeah. Just do a show every morning in there. Really?
Hey. Fill this fair value gap right here. See that? Now you've got a swing below the low. We were calling for this earlier. We wanted to see one of these happen. Take out these lows, create an inversion to go higher. Now I want to see a body get above here. This becomes more important to me right now. I want to see this get taken out with the upside, then take a long from there. If it doesn't, if it continues coming down and digging into that range again, because remember we talked about premium and discount. This is the discount of the premium. You finally come down into that. You filled it. And you see it's created this swing point. And now you want to see this pop above here, find some support at this, and then start running through this one. That's ideally what I'd like to see. This is a very cruel consolidation, yes. Don't you want it to take out the lows first? Yes. Sorry. Yes, you're right, Russell. I do. I just want to see this get taken out. I don't want to see go all the way down to here. No. I want to see this just take out these, create this inversion, work your way above it. But I want it clean. I don't want to see this waffling crap side to side here. You want to get on top of it. Nice big bold candle, come back into it. If we continue to stay on the downside of it, then you're looking for the breaker to get revisited. And this order block here. Now, as Michael says, if you have something that is within if you have an order block that is in less than 50% of the range and there's a fair value gap below you, expect it to take the fair value gap below you, which is back into this breaker here, or mitigation block, whatever you want to call it. That would put us right in there. So I just want to see this hold and not let go. Big bold candle in here now. Big red candle coming up. Sorry, Chandra. We're bullish again. As soon as we get above this candle here, we're going bullish again. Seems indices are consolidating, so Dixie can put it into the euro and pound. Told you, sir. I'm done, bro. Too tired. 2 a.m. Small profit. Oh, go get some sleep, Lambo. Or Lobo. Got to get above here, though. This is the premium one. This is the one I was telling you about. You got to get above the premium to get confirmation this is going higher. So I should really kind of put myself at break even in case this hits that, turns around and comes back down again. like that. Pay yourself. Take $60 out of that. So there's that's the inversion. Come back, found support. If it comes back and gives me another little run into here one more time, I'll load on again. I'll just keep loading on all the time. This is bullish for me right now. I'm between bull and bear, and that's like array to like array. If we get back into here one more time. This just kind of creates the buffer for the stop loss sitting down here. There's bounce off that one again. Coming a little deeper. It comes back to this little mean threshold right here. We'll try one more time from there. Now you want to see big bold candle get through here and take this one and come back into here. Lovely. There you go. I don't know if we're going to capture this now, so I'll let that sit. Body got above it. You come inside it. Let's take one there. That's going to be a longer stop loss though. Robin wanted to see these trades off of here, so we'll do this one. And as soon as it takes that rejection, oh, it's already hit the rejection block. So now we have to wait for it to take the highs. And then this will slam up, burk, right up against here. Just because that would be the first place to pay yourself, right? So I don't really want to lose anything there now. So yeah, you know, I could come all the way down to there. I have to go here. I have to go here. This mean threshold, I don't want to see that lose now. This could come all the way back against me here now that we've hit the rejection block. That's the support. Start going. So we have order block, traded above it, traded above the fair value gap, body closed above it. We came back in, tap the mean threshold or the consequent encroachment. Now we're tapping the body. I don't want to see this dig down into here. It could, but I don't want it to. I want it to start to leave here with a sense of urgency now. And I'm paying a premium price for it, right? And that's closing below it. So you got to get out. There's the mean threshold. No, I'm out. Got to wait for the close. That's plain chicken. I think that one closed below there. What's the high of this candle here? And that's going to be your rule, right? 52.25. What's that close on that one? 52.25. It actually closed right on it. So I got suckered in again on the wick. Now watch it go. You guys get to see when the precision is look at that. literally opened up on top of it again. It's the precision that's I'm wrestling with the precision. You're still bullish now. That mean threshold did hold price, so there's no body broke below it. We came back up inside that fair value gap, opened up on top of it. Now you're slowly starting to cinch yourself higher. So bullishness, we've got above the premium array now with a body. We're finding support with the bodies inside it. You want to keep pushing higher now. Chandra, I told you, sir, it was going down. Seems indexes are consolidating. I'm done, bro. Tired. Cheers. Thanks for the teachings. Learning how to read price action and waiting for setups if given. It seems pretty good up move. Kind of what we would expect, isn't it? With no news till the end of the week. So this trying to stay in the price action here now. So you're inside this consolidation right here. You got a cam model 1, 2, and then there's a 3 down here as well. There's a cam model 3 potential setup here. And I think we'll do this one. There's 2.5. If we get a further run up, 2.5 puts it at 298.50. And 298.50 is right there on that daily inversion. So if this price leg now continues as the swing point and the next projection to 2 and 2.5 as the upside, 2, I'm going to go along on this again, and I'm going to go for 2 and 2.5. To be below here. So in here you'll find 50% right there. Mm-hmm.
I gotta shut off a breaker. It's for a plug in the living room.
Mm-hmm.
I don't know like how your house is wired. I just don't want you to lose anything.
Oh, in case it shuts down.
Yes.
Okay, guys. So I may suddenly black out on you. Yeah, they may be shutting off my power. So go ahead, do your thing. If I disappear, then you'll know the power.
You'll know in like 30 seconds.
Okay. No
If it
worries.
does shut off,
Don't worry about it.
okay.
Yeah, it's no big deal. I was only gonna do another 5-10 minutes anyway. So
Okay.
that's cool.
It might not. It might not shut off.
Okay. No worries.
Okay.
Thanks very much for letting me
You're
know.
welcome.
So if it disappears, we know why. If I disappear, you'll know why. $18,245.5, the midpoint of the fair value gap.
Stayed on?
Yep.
Oh, nice.
Good. We're still on. I hope you don't disappear. You're still here, Talk. I'm still live. We might actually break 200 or 700 people this month. Yep. Painful playing off of a tight consolidation like this. I'm just hoping that we're going to hit that objective later on this afternoon. Who was it who said they were going to get off of that? Talk says long from 18,245. Key level marked off here. So now you're bearish inside this range. You're bearish for a discount. And here's your discount. So you could come all the way back into here. So here's one of those buffering situations. So let's say you went long right here. You went long, and as soon as you get to rejection block, you pay yourself. When it comes back again, you load on your trade one more time. And if you get back up into your rejection block, you pay yourself again. If it comes back down, you pay yourself again. Just keep repeating this over and over and over again. We have a little fair value gap inside this guy here too. So I wouldn't want to see this close a body below that and inside. Then I start getting nervous. I'm on the wrong side of this again. And then we could be reaching much deeper and back into here, which is clearly what I don't want. Get above there. Mm-hmm. 1 a.m. in South Korea. Go to bed, Talk. Go to bed. Put your stop loss in. Go to sleep. Don't even think about your trade. Don't even think about your trade. Just enjoy your sleep. I want to see a body get above here, not just at these little wicks. I want to see a body get up above here and above this candle's low. So that little extension now would have to fatten up. I'm going to get a, like, above that. That's what I want. I shorted the first breaker below the lows and was stopped out. You shorted the breaker below the lows. Oh, from here you shorted? And just got stopped out. Yeah, if you use your inversions as levels of support or resistance, you can stay in price action a little longer. And then always trying to look at the range. See, this one traded below, so you can say, yeah, you're bearish. Well, you're bearish inside that range to the next array. And we hit off of that. Now, if you're really bearish overall, you have to lose this discount one. When you've got two, like I mentioned, if you have two of them inside your range, and the second one, which is in the discount portion, if you lose that one, then that's more of a stronger indication that you're going to go lower. If you lose the higher one, that's a more stronger indication that you're going to go higher. But if you keep losing them up and down and up and down, then you go, okay, I'm inside the range, I'm out, I'm going to run for the outside of the range, inside the range, outside of the range. And that's how I just kind of keep reading it and saying, I'm bullish, I'm bearish, I'm bullish, I'm bearish. And people might look at that and say, you can't make up your mind where you want to go. It's like, no, I can't. It's the algorithm that can't. I'm just staying on the horse. It's spinning around right now trying to flip me off. And I'm trying to stay on the horse by reading which side of this inversion price is actually on and in what part of the range that inversion sits. So if we end up closing below here, then that's going to get taken and we're going to go lower. And clearly that's where my stop loss is sitting here, because if we trade below that, then, and people say, well, look, there's a ton of liquidity sitting right down in there. Yeah, but you don't want it to revisit that. That's what I want, right? If I don't get that, if it trades against me, I'm prepared to lose 300 bucks. But all the time, this thing is blocking out, providing me some support. And we're wrestling with this guy trying to get on top of him. And we keep sinking. It's like mud, right? You get up on top of him, then sink back down. You get up on top of him and then sink back down. You want to find some hard footing here. And then start marching above here. But you've got liquidity here and liquidity here now. That's a premium. That's a discount. And we're in a consolidation, and welcome to lunch hour. You really don't want it. So we could take out these lows for lunch. So now I'm going to move this inversion. If I close below here now, not here. If I close below here, I'll close that trade out and take the loss during lunch hour, which is where you shouldn't be in. This is high resistance. This is the pain of being in a high resistance liquidity run. So if it comes back here, I'll just close this out for a break even. If it, now where's my, did I put a take profit up there? I'll put a take profit right on there. So it'll break me even. And my stop loss is going to go to here now. Just because I don't want to be in the middle of a lunch hour consolidation. This is just too much mess for me. And we've got this fair value gap here now. We're sitting right on the body, closing on it. Not a good sign. And see how it's bounced off of that? You're inside this one, or inside this fair value gap, and inside bouncing off that premium one. See how they're just kind of, you're in the middle of both of them, between there and there on that one candle. You're bouncing back and forth on it now. You want to see us really pound out of here. Get up there. This is where it blasts right through here and starts taking off to get my trade out. But you can see why we're in between these two right now, and the bodies are respecting it. So one of them's got to give way. If it's this one gives way, my stop loss, I don't want that to come down, because then we're going to dig into this guy down here. And you're just tapping the top of it, tapping the bottom of this one. It just feels like it wants to come down here and clean this up before going higher. Come on, give me. I'm out. Good. Good. Now I'm finally out of that mess and break even in a consolidation. Who wants to be in that mess anyway? So you can consider Lady Luck getting me out of that one. And it was in a premium array. Derek prefers a nice discount array, so it would be nicer to get better lined up for a run in a discount array somewhere inside here. Would be nice. Let's wait till after lunch, shall we? Because you got both sides of this. You can be running out. Chandra's this big red candle. Chandra, you've got so much hope for this big red candle. Close your position. Do you have a magic 8-ball? Yes, I see it all. So now you're back to bullish again. See how you were bullish, bearish, bullish, all inside that one array. So when you're looking at the higher full run, you're bullish and bearish inside the premium portion of the range. So when you're bearish back to a discount array inside the range. When you blow through that, then you're probably going to take the lows and go lower. It's like this one here. You're probably going to go higher. Nope, you're coming back into the middle of the range. Probably going to go higher. Nope, coming back into that range again. Now you see this guy forming below this low. You go, now I want the bodies to respect that. Start pushing higher. We've now broken above, come back inside that range. So you constantly keep watching this thing here. And then when you see this lunch hour run, you're sitting in the middle of lunch hour watching this same kind of price action. But I want you to stay on the horse as long as you can. I want you to watch price to the point where you go, you are not going to shake me off here. I know exactly where you are. Unless you have this big rip candle and you rip away from me here. All that's doing is giving me an indication of what direction you're choosing to go or what stops you're trying to run. No different than any big news event. So now, are you bullish or bearish? You're still bullish. This candle here, you have to wait to see where this closes, right? Because this could be just a run on the rejection block here. Inside the small little consolidation here now. That candle and that candle, they're literally overlapping one another. This candle here was validated when that candle formed. This candle here was validated when that wick broke that low. And you have a little fair value gap below you, and it supported it. On the upside, and this one here, sorry, on the downside and the upside, you did not get a body break this, and you did not get a body break this. So those two are in confluence with one another for higher. A higher run. Body break above it again, you break the highs, you pay yourself. If you're in these consolidations and you enter in here, you pay yourself there. And it's not a lot, it's 58. If you take the high there, 59, you might have got 10 handles out of that from there to there. And then you come back, you do the same thing again. See how you go from there, take it out, discount, take it out. So you would have had 10, 20 handles just off that small consolidation. If you know what you're looking for, you see you have a run on the high, come back again, run on the high. just going to shut my door there. Close your position. Do you have much to get? Well, yep. Would like to see it take out a low before moving higher. ICT is thinking higher for the afternoon, as I recall. Good. At least he and I are on the same wavelength then. So this was the low. This was the consolidation. We were actually calling for this back over in here. Let's drop below, create this inversion. The inversion still holding right there. You see that? Inversion still holding. And now you're getting support above the upper one. Come back to the inversion again, finding support above. Last little wick down into this little inversion here. It's holding price, continuing higher. And this is where this is good. I love seeing this kind of stuff because this is where you really get to practice looking specifically at candle to candle, the range that you're in. This would be no different than if you were sitting in weeks and weeks of daily candles that look like this, and you're trying to trade, trying to get yourself a sniper trade inside this crappy consolidated environment, right? And if you see this, you go, okay, I'm looking for an opportunity to go from a discount array to a premium array. If I can catch this sucker right here and run back up into premium, you've got a whole day's worth of trading. You capture this one right here and you capture your day's trade to that and you're done. That's your whole day trade right there, and it was a positive one. Or you capture this one on a discount and then you go over to the next morning before you finally capture the return back to here, if that was a day trade. So you practicing this on the 1 minute candle is going to make you better at all the other time frames. I've discovered the problem with doing this 1 minute thing though. The problem is when you've been trading on the 1 minute chart, you tend to not hold it as long because you see where these little swing points are, and they may be just a simple, a small retracement back into a range, and you've got to allow yourself to this little, okay, it's traded below, it's going down now. Okay, no, it just came down to a discount array, then it ran back up above it, and you go, oh, now I'm bullish again. Oh, now I'm bearish again. And knowing that every time it traded below it or above it, you keep changing your mind when you got to allow yourself that small run back into the discount. That's why I like Derek's idea of pick up a discount and run higher. Don't pay a premium like I did. Paid a premium at over here somewhere and just weather all this crap in here. Wait for a decent discount, either to come back to your rejection block again, or ideally this little piece right here. I'm going to put this here because I think this would be a great place to come here before going up higher. If we could come back into here and catch along, that would take out all this back into here. And I wouldn't want to see it take here, but you could see it come back into the rejection, or sorry, the order block here and the mean threshold. Stop losses there. I don't want to see it come all the way down here. Just back in here would be nice. See, this is why you pay yourself. When you're in these consolidations and you keep aiming for up here, and you start learning how to pay yourself at rejection blocks, old highs, and you keep coming back into that array right here. See this guy right here? You come back inside it, you buy it, you get out there, you come back in, buy it, you get out here, or get out here again at this rejection block. Rolls over, comes back down, you buy it again, to go long. And you've bought it once, twice, 3 times now. Stop loss would still be sitting down here if that's your range. And you've already buffered whatever loss you would take trading from here. And your stop loss is here. You've already paid for that already going up here. So there's no loss. It's like putting a trade on that's zero stress because you've collected twice from it inside a consolidation. But you've got to have the discipline to recognize that that's a rejection block, and I want to get out at rejection blocks. I'm in a consolidation. I've bought a discount. I want to get out at that high. It's 10 handles. I'm good enough for that. So now we know we're on this pop below here. I'm on a drive down for a discount. So have I worked this whole area already? Yeah, I'll expect to see this low get taken and come back to the one little PD array that's left, which is right here. That one's been worked multiple times. So look for this guy right here. Now, did they take out that low? Yep, they did. The low on that candle is 48.75, and the low on this candle is 49. So 0.25 just took that out right there. Bodies are still respecting this here. 1, 2, 3 attempts or 3 longs. And if it closes below it, come back up to it, break even, get out of the trade. And you want to see this climb up on top of here again? Or it's just coming back into, where is it coming back into? Ooh, there's a little tiny one right there. I didn't see that. Did you guys see that? See these highs get taken out right here? I didn't see this one. So I can't take credit for this one. I didn't see it. But look at it. Body trades below it, trades back into it perfectly right here, and runs down into a discount. Premium array, discount array. Inside this range, you see this? Did you see that? How many people saw this one right here? Short there to discount array right over here, and it came all the way down once again and filled you perfect from there to there. And that was 50 to 57. So there's 7.5 handles. And if you bought in again there, you run back up, you want to get above this one again. So you're going to go from like array to like array. Bang, hit it again. See that? There's another one up here. There's another one up here. There's a little imbalances. There's your little imbalance. Tap, you're in, fill. Nice. That's just watching. You watch price action. I tell you, it all makes sense. If you just stay inside the range and you can see the points. And yes, we cut through candles. And yes, we're in a range. And yes, this still plays an important role. So the body broke above it, come back, find support at it, push through. You want to get above this candle now, find some support and get through these little imbalances. Because you've taken that low with a 0.25. Yes, it's very educational for sure. For when you look at this consolidation, people look at this and they just go, "Oh, I'm not even wasting my time in there." But if you play in it, candle to candle, you can still see a level of precision in here. Obviously, you're not trading it, but it's nice to look at a level of precision inside that and say, "Yeah, that all makes sense. Yep, I'm going bullish. I'm going bearish," and you're not just waiting for that elusive green candle or red candle to appear. You're looking at it and saying, no, it's not going to appear right now because I'm bullish. I found support. I'm bullish. I need to find support and I need to get through this inversion here. There, you closed above. You're still bullish now. They're not expecting any big red candles. You're just expecting support off of there and go higher. Or if you're in a premium array and you've just filled this guy right here, you're looking for a discount. What is in a discount back in here? other than this order block and that little imbalance right there. If this candle closes, that swing there and this swing here become the smaller range that you're now chopping around inside. This one to this one, this one to this one. Watch right here. Boom. See that? Is that not sexy, cute, or what? Michael loves those things. I love it when it just taps on it, comes back off it. If it comes back through, I don't care. I just love the fact that it hit it. You got a nice reaction off of it. Now there's another one down in here, right off the midpoint here. Stretch it out here, you'll see it right there. This is our swing. This was our swing. We took out a couple little smaller swings here. Breaking structure. You come back, find support inside this. Premium discount. Ooh. Okay, so look, I still want to get this one down here. This would be nice inside this bigger range now. If you pull your fib tool here, premium of the premium, discount of the premium. See the range that you're in? You got your premium of the premium into the discount of the premium order block. Now, if you've been working this premium discount like crazy already, and we notice how we have not really dropped into this discount, premium of the discount, we've worked premium of the premium and discount of the premium, but we have not worked the premium of the discount and the discount of the discount. So if this gives way here, look for down here. That would be enough of a discount range. All this stuff here, you gather up all these orders here to run up higher, and we're looking at 10, 23, 4 more minutes. Watch what happens in 4 more minutes. Equal lows, lots of liquidity sitting here. The fact that we closed below that mean threshold is interesting for me. Fair value gap here. So when you get into consolidations, they really start to overlap each other now. So you got this one right here. And that's in the equilibrium of that range. You see that? So if I pull from here and here, see how that fair value gap is sitting right smack in the middle of the equilibrium. So premium discount, you're like literally splitting it in half and having a premium and a discount on either side of that small little range there. So order block. Imbalance, see that little imbalance right there? Tap the bottom of the imbalance. Mean threshold. Good sign, because when you see this breaker, last up close candle before taking out this, did it take out that low? It didn't. It's equal to that low. Low is 70, 48, 75, 48, 70, yeah, equal. Back up to rejection block. So you see how many times you could have paid yourself at the rejection block? Here, paid yourself at the rejection block. Come back, give you another opportunity to get in here, pay yourself at rejection block. Comes back here, pay yourself at an old high. Comes back inside that range again, pay yourself at rejection block, right there. Boom. Come back again, pay yourself at rejection block. How many times could you have beaten or run 10, 20, 30, 40 handles out of that thing just in a consolidation, buying, looking at this and trusting that that's providing you a level of support? Until you get a body break below it, keep using it to run the liquidity on one side or the other. Not that you would actually trade them, but when you're looking at trading consolidations, always buying the most discount part as you can. And if you've got a fair value gap down there, every time it taps into it and you've swung below an old low and you get this kind of reversal happening, buffer it. Buffering is just come back, pay it, pay yourself, come back, load on again. It's like starting the trade all over again. Pay yourself. You get to load on again, pay yourself. Load on again, pay yourself. Load on again and pay yourself. And if it comes back for the 5th time, pay yourself again. You got to equal those here this time. Eventually, it's got to come down in here, I think, before it goes up higher. Imbalance right here. Just come all the way up here and pay yourself again right there. Bing, pay yourself again right there. See that? So you came down in here, pay yourself, and now it's getting smaller and smaller. So now you say, now is it really worth it for me getting involved in this? No. Unless it comes all the way down to here, maybe. Otherwise, just stay out of it now and wait. But still keep an eye on it, because you've got there. Oops. And you've got right here. See how they're overlapping? That one there and this one here. When you're overlapping, when you're so tight that the array's got to go, I'm going from the premium to a discount inside the small range in wicks, I've got to bust out of here. I got to go somewhere. So you do not want to be trading in some of that. If that was a daily chart, you wouldn't mess with anything. You'd wait for a displacement candle to give you some idea of some direction. Otherwise, it's just going from premium to discount in wicks. I like it that we've got a body close above it right there. Tippy tappy. Now if we get a body close below that, all you've got is that little imbalance down here. The play right here. See that? That's the range I'm in right now. If you stay right on the 1 minute candle inside this tight little range, you could ask yourself, where am I going to go from here? I look for support, discount array, a premium array. I'm above the premium array. I want to see that go higher. If I drop below this, then I'm going to come back to a discount. And if I get below that, then I'm looking for these lows to get taken. You're still above it, so you're bullish. Inside the range. Premium discount. Okay, so now we're below it. And you want to get this run right through here now because we want to start running these lows. Otherwise, you're just premium to discount in wicks. Look at that. Equal lows again. Watch that in 10 seconds. And now you're, how do your thoughts change right now? Oops. Yeah, okay, we don't need that. How do your thoughts change right now? Instantly you go, I'm discount. I'm running to a discount array now. So we're probably going to, if we get below here, we're going to obviously take out those lows. See, there you go. See how it changed up? Right there. Gave you the indication. No, I'm going to go to a discount array. Well, we've whacked through this one multiple times. So what have we got left? We have rejection block on the downside now. We've been hitting rejection blocks like crazy on the upside. We've been shrinking, getting smaller, and keep hitting rejection blocks, building in these old lows below us. Let's take a run on those now. There you go. And that you saw right there. You saw that coming right from here. It changed direction right on the other side of that fair value gap. It popped, tapped it, and left. And we were waiting for it to do something because it was running out of arrays. It was getting smaller and smaller and smaller. It had to extend the range, either higher or lower. And you look at all this down here, you go, there's some cheddar down there. This has been, we've constantly been keeping trying to run out these highs. And they got flat bottoms. They're not going to leave those untouched. So if you were going to guess which direction, it'd probably be a safer bet to guess these flat lows versus these jagged highs. So you want to see this come down into here, come back up, find some support at it so we can get long on that. Preferably closer to 1 o'clock. We may run down and take this low out here and dig into this breaker. Wouldn't want to see that, but there's this big ass inversion right here that we could be returning back into. Right there. See that? Now you don't want to see this guy here. Now we're in the discount. Right? Remember on the premium of the discount, the premium of the premium. Now you're in the discount of the premium, which is what we're looking for. And you're still inside your inversion here. So you're not bearish until it closes below this blue line here. Then you're going to go, okay, now we're running down into here. Otherwise, you're still bullish. I don't like to see this digging into here already, so we're looking at these equal lows now and this order block here. Chandra, here's your red candles you've been looking for. You finally get your giant red candles. I go live every day. And I start at 9 o'clock in the morning, New York time, which is 7 o'clock Canada time. See now how we've closed below this little fair value gap here, and inside that reversal, we closed below it. So you're looking for this low here now and a return back into this old breaker here. So you don't get excited about this thing going long again until you get above here. If that takes out this low, you wait for this guy to happen. Now we can get rid of that one. remove the drawings right now. Oops. So they're looking for this low to get taken. Where did that come back to? Yeah. Looking for this low to get taken now. You see how we saw that right from here? See how we saw that close right there? That says, oh, now we're going lower. Pop in, give you one quick opportunity. If you're really robust and want to catch it, you trust it. Ran the lows. Came back to that imbalance. Ran this one out. Ran this one out. I'll leave that open. Start coming back down. So for now, we'll just put this one here to here. See how our bodies are below it? No different than this one we saw up here. When it traded just below it right there, that guy, that's no different. So we're expecting this to come lower. Not until it breaks above this again, here, or right here, that you start to think, okay, now we're going to go higher into this range. So if we got this is our next swing point, or our next range, now you've got this little guy inside here. Oops. So we get a body above that, then you're bullish again. And all it was is just a run on liquidity here, and that stop loss that you had sitting down here is still supported. So now you're bullish because you broke this guy here, and now you're breaking this one here, which is the bigger one on the other side. See a body respecting that. Back to the order block. Swing here. Body breaks below it, comes inside it here. Takes out the lows. Comes back to the order block. Continue down. I want to see this give way. Blow all through this again. And start taking this out on the downside. I want to see this low get taken out. For lunch. The lunchtime low. And then continue up to the upside for the rest of the day. Otherwise, right now you're bullish. And you've just keyed off that inversion again. See right there? And now you've created another fair value gap right here. So now you can discount that jobby. Bring it over here. And that guy there. This guy here. You got that bullish one here, a bearish one right in below it for the inversion. So I don't think it's going to leave that untouched. So a like array to like array. Where's the like array? Quick, tell me. Jot it down on the side. Quick, tell me where it is before it hits it. Before it hits it, quick, tell me where it's going to go. Like array to like array. Quick, quick, tell me. Who's going to tell me? Oh, auto adjust the 5 minute. There you go. right here. Like array, again, that one we talked about down in here, inside the larger range. We're still inside that larger range. Discount array to premium array. Where was it? Sorry, the premium array is up here now because we're inside this guy here. So you're looking for a return up into here. And there you go. It's a small one from here to here, right? So you got 46 to 56. That's 20 handles. Now you want to see that one give way. So if it's in the premium now, you want to see this give way, find support at this, and keep hammering up. What would be cool now is because you didn't get a chance to get here, if this holds price and this reverses now, comes all the way back down into this little area right here. Like array to like array, and then like array here to like array there, and then reverse again, come back into here in these consolidations. So I'd like to see this start reversing now and come back down. Oops. Probably get these loud noises. Time I smack that thing. If you get a closed candle above here, then higher. If not, I like to see this come all the way back down into a discount portion in here. Oh, yo. 687. If you like what we're doing, hit the like button. If you don't like what we're doing, don't hit the dislike button. I think about that guy yesterday and I go, what an idiot. I don't understand why he has to be so rude and not, he's missing an opportunity to really capture something or recognize something here, because it's not BS. This stuff, it really is price action and learning how to stay inside a price action model. Now, if you're trading to that rejection block again, you've got one right here. There's another one up here, up here. Watch this 10 seconds now, closing above this, then you got more bullishness because you're now in the premium array that has been taken out to the upside. So don't expect this to come running down here right away. You want to see it get underneath this to start coming back down here. But right now, oh, like that. Okay, there you go. I was going to say, you needed to see it come down here, come back up and tap it. Nope. It went ripping all the way through here. And what did it come back to? Right back into that inversion again. Here we go. Watch right there. So if you wanted to wait for it to come back in here to get your support, it just ripped right through you. Inside the small range, right back to fill of that fair value gap here. And right back into that imbalance, that swing. All these lows are taken out. There's your swing. There's your reversal to go long. Stop loss will be down here. And you're looking for just a run back up into premium inside this range here. So if you caught off of here, if you had like an order sitting in here and you're looking for your fib tool again. Pull your fib tool from here to here. Optimum trade entry. Right in that spot here. So you want to do a reversal on this though. As soon as it comes back to 50%, pull your stop loss to break even. And take a chunk off right there. Take a chunk off there. Move to yourself to break even. So now this will be a zero stress trade. Then you'll take your stop loss and move it up to 50 if you hit 62. And so on and so forth. So if you took 50% of your trade off from here, we enter to here, it wouldn't be a heck of a lot. It's 3 handles, not worth your time. Not worth your time. I still want to see these lows get taken. There's a little pop down here. Remember Michael was saying that, and you heard me mention this earlier, I just remembered it now. I'm thinking, why did it skip through? Oh yeah, remember when he was saying, when you have a range, a small range like this, and you have an order block with a fair value gap below it, and it's below 50% or just above 50%, you can expect it to run on the fair value gap below. I think that's what he was saying. Double check the 18th. He said it in the 18th video. That long one he did on the February 18th. Oh, my wife's calling. Hello, honey. I'm doing well, thank you. I have 2 of them here right now. Yeah, they're got to go to a school tomorrow. The kids are going to interview me on hypnosis, on how to do hypnosis. My wife has she's a principal of a school. They're going to do some inquiry learning. They want to learn about hypnosis. So they have got a whole schwack of questions. They're going to go into a grade 5 class, and the kids are going to hammer me with a bunch of questions about hypnosis. So it should be fun tomorrow. I'm seeing a very bearish move on the 5-minute chart. I have to clear my throat. Hang on a second. Let's see if you guys have to listen to me hack all the time. Yeah, you could see, I don't see very bearish, but I definitely see, you see that right there? You did not get a candle above that, so you're looking to go lower. But you got to remember inside here, if you're just using this, you can't use this one to validate this one, because this one will change on you over and over again, right? So this one here, if you're looking at your analysis on a 5-minute chart, stay in that. So you're bearish for sure, based on the fact that you're below this little fair value gap right here. You've wicked up through it, but the body still remains below it. And yeah, now you're getting your run. So good for you. Good for you, Chandra. Nice call, nice call. Good look on your 5-minute chart. Well done. See how that can switch you up when we're going short. Now we're going long. Now we're going short, like big time short. Taking out your lows. We wanted to get all the way down into here, which we did. And welcome to the ending of lunch hour. We did get the lows taken. Lovely, lovely. Now, Chandra, are you looking to run all the way down into here? If you are, you want to know that this candle here, this fair value gap, you want that to stay or to close and to come back into it, find support at this order block and at that fair value gap's low, anywhere up into the 1, 2, 3 ranges inside there, and this candle right here. You want to see a body get below that, come back up, find support at it. I don't think we're going to be denied that run above. I think this is just one of those runs on liquidity before, during lunch hour or just after lunch, and then the book at north. So in order to maintain your bearishness, Chandra, you want to be below this candle and below that fair value gap there on a close, on a 5-minute close, and then start eating away in this one. And now we have a swing right here. A little tiny guy right there. We got lows that are taken out. You want to see a reversal here if you want to go long again. Now that that's been taken out right before lunch, are we going to take another little plummet down and dig deeper into Chandra's 5-minute wicks, 5-minute candles? Get right back into this order block here. Old high, a body. One more drive down into here or close this fair value gap would be nice. We'll see what happens above here. Dave's finally on for a few minutes. I've got to watch these ones more. Imbalance, fair value gap. One candle rips through them all and takes this candle out, then comes back to this candle's mean threshold or this candle's body. That candle becomes the important play for continuation to the discount. And that's practically a full fill anyway. So you'd be like, is that fully run out now? You just come back to this breaker here. Or this fair value, or just order block. It's not a breaker really. So that's still providing support to go lower. Come on, Chandra. We want to see this thing book it down here now. I want to give you lots of red candles now. I'm with you. I'm definitely with you for bearishness right now. We're still finding support for bearishness. 5-minute candle, you've taken out the lows. So for you on the 5-minute, if this low gets taken and this right here, if this turns into a fair value gap in the next, oh, that'd be 5 minutes. If that gets taken to the upside, then you're looking for more upside. If it stays open and you continue down, look for more downside. See how the body's closing right on that fair value gap? You want to see it close below that and find support at this. And it's literally closing right on it. So you're waffling. You don't know which way it's going to go right now. You've taken that low out. You want to see another big bull candle get down here now. Inside this range, if it gets on here, it's got to get above that one to go bullish for me. Just this wicks. Just continue to help provide more downside. You could say, yes, I like this, I like this. Let's have a look at this on a 5-minute chart here. So 50% will put you right in here. Consequent encroachment of this BISI puts you right about here, right near this. Remember, if we still have an upside objective, we have equal highs. They're not going to leave those untouched. So you have to ask yourself, what's an optimal time to run those highs out? Time and price. Return back into this big breaker here. You could get a run all the way down into here. Would be just a pop below the 50% into this order block here and further run up. I think you want to get down all the way down to this liquidity, don't you? If you do, just remember, don't overshoot too many PD arrays. Because if it reverses on you, you go, why didn't it go down there? It's because there's a ton of PD arrays that it's got to get through first to get you your objective. Because if this reverses now and shoots back up, you'll be frustrated saying, why didn't it do that? When you stay in price action, you want to make sure you're constantly watching. See how that we're not trading below that fair value gap here. We just came back and filled it with the bodies. They're respecting it. And now we're getting a retracement back up. So you don't know for sure that it's going to go all the way back down there, Chandra. And if it does, then you say, great. You could argue and say, I knew it was going to go there. But how did you know it was going to go there? Where was the proof that you knew it was going to go there? Or do you just say, the liquidity is sitting down there, so it has to go there? Follow the price. Right now, we're bullish inside this small little range right here. Back up to the order block, that little imbalance. Now you're coming back down. You either want to come support off of here, which is what you did on that candle, and start pushing higher, or off this candle here. You're between this one here and this one here. The body, it came down, tapped the body, came up, tapped the body there. So in these two candles, you've tapped that. So now you want to say, I want to get above this or this fair value gap through the mean threshold of this candle and push higher. There's 50%. the mean threshold, the fact that we're eating all through that in one candle, your ass is next. Discount array, body trades above it, you can't get into it, so you look for the order block. Body trades above it right here. Oh no, you don't. There's a wicks above it. You're back into it here, but yeah, you just ran the highs out now. Here's your premium array up here. This array right here, 75%. That's why you can't say for sure on your 5-minute chart that that was going to come all the way down here. There's way too much. I would say you come in here and you go, this confirms that you're continuing on the downside, but if you see the reversal happening here, you can't be fully committed to downside on your 5-minute until you see confirmation on your 1-minute that it's going to continue down there, unless you're coming back into a smaller range. And right there is that little fair value gap again right there that we're looking for on the 5-minute. Right there to there. You want to see it body get above that now. See how it's come back into it? Tapped it perfectly. And we're reacting off of it. Right at 79% optimum trade entry. Now if you come ripping back down, now you can say, all right, now we're back into a bearish run again. But right now you're above this order block here on the 5-minute. If you come back into the top of that, leave that open, now you've got a fair value gap, and you've got a ride off of this order block here that you're going to find some support off. Now it's been validated. So now you've got a swing, a break in market structure to the upside, break in structure to the upside. You want to see that just give her now. You already broke through that. Remember, your ass is next. All in one candle. It takes out that high. If you lose all 3 arrays in one candle, your ass is next. That's Michael term, not the Darren term. That's a Michaelism, not a Darrenism. Right back into, look at that, right back into that premium array again. Beautiful. React off of it. Now Shauna's like, it's going to go damn low. I'm telling you, it's going to go lower. In order for that to happen, see that body closing right on it again, and then teasing you a little bit, then coming back into the range. So I want to see a candle close below this, come back, find support anywhere inside here, and leave your stop loss up there to go short. But if this holds price and we break that high there, then we're going higher. And if we come all the way back into this or this, that's our swing. So this, you can allow this inside a range to come back into with a discount. For me, if you want to go bearish, you have to break this low right here on a close. That's the lowest swing for the run up. We didn't get an opportunity to get in it here. We didn't get an opportunity to get in it here. So now we're going to come back and revisit them. Premium discount. If we lose the first one, it just means we're coming back into the discount one. If we keep it and then we react off of it, it's more of a positive for me for a further run up. So you look at this as the swing. Now we get a body close below this, then you know, okay, now we're running into a deeper discount. Probably this one down here. Watch where this closes in the next 17 seconds. I see it going all the way down liquidity. Look at the 5-minute inefficiency at 18,203. 18,203, 18,203, 18,203. Oh yeah, that's definitely got that. I don't doubt this at all, that that's efficiency, but you can't count that until you get confirmation, preferably in here, that you're going to keep coming down. That's still holding. So yeah, I'm still overall bearish on a 5-minute chart, but I'm bullish on a 1-minute chart. And that may be just running back up into a premium array in a 5-minute chart to go lower on a 5-minute chart. Does that make sense? So just because I'm saying bullish doesn't mean to say you're wrong on your 5-minute chart. Right now, you're still finding support at that level right there, in my eyes anyway. Or this order block right here, this breaker, last up close candle before it runs out these lows here, right? You come back all the way to the body of it, tap it beautifully. Also that little tiny imbalance that we saw right there, continue on the downside, and you've had a nice reaction off of that. And now we've got a body traded below this. We come back up, look at that right there on there to go short. So now I'm bearish. So now I'm with you as a bearish run. See, when I'm on a 1-minute chart, don't let my contradicting your position. All you may be doing in your chart is running back to a premium array to go for a discount again. I'm just telling you that I'm premium or discount. I'm sorry, bullish or bearish based on the runs that I'm looking at on what you might be a 5 or 10-minute candle. If that makes sense to you guys. So don't let my saying, no, we're bullish or bearishness throw you off on whatever you're analyzing over here. Just don't be picking arrays down here until you get confirmation on your 5-minute chart that, yeah, that's where I'm heading. And you need to get below that candle on a close for me to go, yep, now I'm looking at further downside, or at least 50% of that range on a 5-minute chart. Because if this reverses now and goes back up, you're going to be like, well, why is it not going down there? Because it did not break that low. For me, it did not break that fair value gap. We just reclaimed it multiple times here. And it's just a reclaimed fair value gap. It hasn't been traded through and then back into becoming an inversion. It hasn't become a senior array. I call them senior arrays when they validate, like an order block would validate when it becomes a breaker. When you start running out an old high, then it becomes a breaker. It becomes a senior array, not just a plain old order block anymore. It becomes a senior array when you take out something like this. If it doesn't, it gets a minor promotion to mid-level strength candle. But as you know, breakers are way stronger than regular order blocks. So we're just coming out of lunch hour now. Still bullish. Inside this range. We just came all the way up to a premium. Now we've come all the way back down to a discount. Bodies are still trading inside here. We could come one more time down into here. Oops. If we don't, this one's providing a level of support and we're pushing higher. And I want to get through this right here to the upside to be even more bullish. Otherwise, I'm just bullish inside the small range right now. Actually, sorry, now that I'm arguing with myself, you've got this one trading below. You've got this one trading above. They're overlapping. So I want to see this high get taken of that fair value gap on a close, and then you're starting to work on the premium array to go higher. $18,203. 18,203. Yeah, I'm not even down at 203 yet. It's not even an idea, not even a sight line for me right now on a 1-minute chart. I'm inside this range right now. I'm not even worried about what's down here yet. You got to break out of this range before I even consider anything down here or up here. All I'm saying is I'm staying on price action right now. I'm riding the horse. I'm not overextending where I want my horse to go because it's flipping around and it's trying to shake me off right now, and I'm staying on it, and I'm making sure that I stay in price action. This is practicing staying in the price action. The horse is trying to flip you off right now, and you're trying to stay on the horse for more than 5 seconds or 8 seconds. You want to be holding on, and you want to be constantly in price action, saying, I'm bullish. When I break that, I'm bearish, or break this, I'm bearish. And then you're watching it. And then as soon as it does, you go, good, now continue to be bullish. Here's my next objective I'm aiming for. Because when you start getting really good at, and you start to really catch those, when you're doing that on a daily chart, you'll literally say, as soon as that hits here, I'm going long. I'm going to look for a swing point on a 5-minute chart or a 1-minute chart, and I'm going long all day. I'll set it up. I'll put my stop loss in there, and I'll go golfing for the rest of the day and put my objective up there. That's ideally where we want to get. But stay in price action, man. Don't worry about down here yet. Unless you're on a 1-hour chart or a 15-minute chart, and that's your next objective. I've got no problem with that at all. It's just not one of my objectives right now in a 1-minute chart. If it's your objective, right, if that 1203 is your objective right now in a 5-minute chart, I'd say you're overextended. You don't know that for sure that it's going down there yet. So unless you've got a stop loss sitting way up there and you're willing to risk it and say, yep, I'm absolutely sure it is because that's holding. If you lose that on the upside, then I'd say bail. Right now, if you're short, hold that little spot right there on your 5-minute chart. But that's just me. What do I know? I could be totally talking out of my ass right now. Watch this right here. That, you want to see it give way on the upside. There, give way. Now I'm even more bullish now. Now you're looking at this one here. You're inside the premium range now. And stop. I want to move a stop loss up here, but I'm not in a trade. I want to move it up. Because then you're saying, all right, if I lose this on the downside, then I'm bearish. So that's how you manage a stop loss, by looking at key levels instead of worrying about, trailing a stop loss at fixed levels, which is absolute bullshit as far as I'm concerned, because these are so dynamic, these levels. You're going to say, if I lose this, I'm on the wrong side. So my stop loss is going to go there, because if I lose that, then I'm wrong. And that's why you'll get to the point where you'll be able to manage it by saying, I'm wrong if. I'm right if. I want it to go above this. I want to go below that. I need the support there. So now we're digging back into this range here. From there to there. You traded below it, you're bearish. You traded above it, you're bullish. You trade below it, you're bearish. And because it's in the higher part of the range, if you trade above it, you're more bullish. And if you're below it, you're going into a discount area. So look, watch. If you go below it, you're going into a discount. Okay, you closed here, you tap below it, right in below your 50%, then you ran back up. You ran above it into rejection block, come back down, and you may just see this whole crap going sideways, up and down, up and down. And you've worked the premium of the premium and the discount of the premium. Here's your discount here. Look over here. Do you see anything down in here that hasn't been touched yet? But until we break this on the downside, I'm bullish. And then you're looking at that range and you say, okay, what's my next area I'm running for then? The discount rate, like array to like array, premium, discount. Oh, all I'm saying is when it reached there, it will go long. A minute 1T 18203. All I'm saying is when it reached there, it will be a good long. Oh, absolutely. Inside this thing here. Oh, absolutely. Look at that. On a 5-minute chart. Look at that. Is that a swing point? Not quite a swing point, but that's an inversion. See how the body traded above it? Right there. So if we do, you're absolutely right. If it trades all the way back into this, and that becomes a nice little opportunity to go long, oh man, you're right. That would be a beautiful one. So what you want to see then is you want to see that break on the downside, and then you can say, great, trade back into this, go short, like array to like array. You'd aim from here to here. And then I'd say, I'll be all over that for a 5-minute chart and say, yeah, that's a sexy run. And I totally agree with you. NGU, I agree with you. So now we're discount. See, we're short. Come back up inside. Now this may frustrate you going short, long, short, long, short. Well, that's a consolidation. Welcome to a fair value gap inside a consolidation. That's what it'll do to you. Oh, and I didn't see that guy right there. Did you see it? Did you see it? Right there. Body breaks below, swing above. A high, swing high, body breaks it. You come back up inside it. You continue down, pay yourself at the rejection block. Now you're bearish into this guy here, like to like. Watch down here now. I missed him. I was still playing over here, but that's it right there. Now I want NGU and I want Chandra to be right. I want you guys to just nail this now. Right here. I want this to come all the way down here and give you your joy. See, there's your like array to like array. Done. Rinse and repeat a million times. I'm sorry I missed that one for you guys, but I was too busy focusing over here when it was sitting right there. But that's inside the price action. That's staying on the horse, man. I was going long. It's saying, yeah, we're going to go up here. Well, we did hit the premium array. And then we're like, okay, now I'm bullish. As soon as it goes below that, now I'm bearish right here when I could have been bearish one candle beforehand. So it's almost thrown off the horse. See how it comes all the way down to that little spot right there? Little imbalance. We called that earlier. Beautiful. Now you come back into that range again. So you're at premium, discount. Now go from discount back up to premium. You're inside this one now on the larger range. You're already inside that one. Are you going to make it back up to this one? If not, order block, mean threshold, roll over, come back down. Or be a real bugger and go here through that, pop on, and continue higher and deny you. Yeah, there you go. See how it runs right back up into the like array to like array and then back to like array again. We've seen that multiple times today. Bitcoin, you see it all the time. That's been the chat of the day, is like array to like array. Now we've got a body that's going to close above that. Oh, no, we don't. We're at 43 seconds. See that? Just come all the way down, gather a nice little discount. Quick, snappy snap off of that to go higher. So you're like, I want to be with you guys. Oh, no, too late. It's reversing again. Got a body. 21 seconds. We'll see where that happens. Rejection block. Ooh, just short of rejection. 12. Wicks do the damage. See where the body ends up in the next 5 seconds. Now you're bullish again. Because now you've got the premium array has been taken out. Inside this small range now, you got this guy here. Find support. Go higher. Look at how beautiful they work, man. Just beautiful. Rejection block. Hold high. Finish this guy off. And then you want to get above that candle. Otherwise, we're still stuck inside these ranges. But see how they have not thrown us off based on premium discount, support, back up to rejection block. Now, if this turns around and comes all the way back down into here, you'll get a frustrated say, why didn't it take the highs out? Well, just rejection block. That's why you always pay yourself at rejection blocks. "15-minute fair value gap is support," he says in big bold capitals. Big bold capitals, he says. That is support on the 15-minute. Fair value gap is support. Okay, let's look at this 15-minute one here. Where's the high on that one? High is 812. Okay, so it's right there. If I go from here to here, 50% is consequent encroachment of that fair value gap in the 15-minute one. From here to here, consequent encroachment puts you right here. You don't even make it down to that as a level of support. It just keeps that fair value gap is your level of support. So if you pulled your fib tool or your quarters, you're just below the 25% and you're above 50% of that consolidation or BISI here. And you're finding support. Yeah, there's nothing in a 15-minute chart here other than that order block right there above you. You validated it, come back up into the body, come back down. Now you're running through it all. Look at the rejection block next, and then there's equal highs. So yeah, that is definitely providing a level of support. See how we found that support? Now you want to get through here. See how it just tapped it again? Right off there. I tell you, these inversions are super sexy, people. So look at how clean they are. Like bang, bang. Love it. Now you want to see it. Give us some love now. Let's start heading for our objective for the day. And this is not meant to make you guys feel bad on the 5-minute chart at all. But that's what I mean by don't overextend your, you need proof that you're going to go down there by that right there. You got to break below that, come back, find some support at that. Then you can say you got a nice cam 1 model there for a run back into here. No body's breaking it. They broke this one here. We're back to all this stuff again now. You got to constantly keep drawing out your arrays. Little imbalance right here. Like array to like array, or as I say on NQ, tangeray to tangeray. Mean threshold, holding price. Up close candle, holding price. Hold highs, find support, imbalance. Get up there. You want to start pushing through here. So you come back up into that premium array, discount array, premium array, like array to like array. Have we heard this already today? Have I said this? Like array to like array to like array to like array. And if you're looking at these smaller ranges, then like array to like array here. If you're in a bigger range, then it's this guy here, or a bigger range, it's that guy there. So those are like 3 objectives you'd be aiming for. So hopefully you find some value in the 1 minute chart. And I know Michael says that you can't just let it all sit on a 1 minute chart, but that's where we let it. That's where I let it sit. It seems to be working quite well in terms of staying on price action. Whether or not you're trading, that's not what the purpose of this site is for. It's to show you how to manage your price action and read price action so that you can stay in the charts longer and more confident, so that when you guys use your own trading method, you can trade with confidence now, because you know what you're looking for specifically to confirm your trade. Otherwise, if you're overextending too many PD arrays and you wonder why your trades fail or it turns against you too soon, when you watch price action like this on a 1 minute chart, you can start to see where it turns, literally where it turns, and says, look, I'm going in this direction now. Super clean. Dink, touched it nicely. Back to the mean threshold, constant encroachment. Body's now broken that high. That's what you're looking for. We're looking for pushing higher now. What time is this? Oh, it's the third 27:28 candle. That could be just a run on highs now. Look for a run back into this range. This could be just one of those consolidated days now. This could be a reversal. Holy doodle, we got a bunch of subscribers suddenly popped on there. We're at 692. We're so close to 700. Woohoo! Lucky number 7. I was part of the original 800, ICT 800. You guys are going to be part of the original ThetaWave group, the 800 group. If we ever break the 800, that would be a instrumental number for me. 9's my favorite number, so 900 will be nice. And 999, ooh, I might do something special for number 999. Whoever's our 999th person. See how we come back to these old highs again? That little imbalance. See that little tiny imbalance right there? Let me just open this up. You'll see it right there. Right back inside it. Like it says, we like to come back and revisit these little imbalances. And you get to see them. They do look beautiful when you does really clean price action like that. you might you might just reject it and then pop back in at 999. Give away a free hypnosis session. Take away your stress as a trader. I don't care. I'm just clicking away, man. I don't care. Imagine having the power, the discipline, the power of your unconscious mind to discipline your mind to always look for your setups. Worry about nothing more than that. And as soon as you see your set up, feel confident. Always do this, always do this. And if you got that as a hypnotic suggestion, you could probably make a living doing hypnosis on day traders, new traders. Maybe I'll set up a hypnosis tape. Back in the day, we called them tapes. When we actually spoke onto a little thing called tape. For all you young people who don't know what a tape is. And then yeah, and just do a CD. And in case you guys don't wonder, CD was like this little disc back in the day that you spoke on, and it like, what's a CD? Run the highs. 32. Reversal. Body is taken out. Ooh, no, I was going to say if a body takes out this low and come back and tap it. It did take out that low. Look at that. See that fair value gap right there? Traded below it, popped in it, just tapped it, continue on the downside. So we've got a slight reversal happening here. You get a return back into here or even back up into here. If you get a body trading above here, you're going long again. So you want to see this get that reaction off of there. It's kind of good. He keeps me out of their hair. The electricians doing their thing. So now you got a reversal happening. So now you're bearish. Let's get you guys your reversal. Now that you've taken out these equal highs here on the 5-minute chart and your 15-minute chart, the highs are now been swept. Now what you want to see is this reversal happening on a sweep. Come back inside that right there. You could get short right there. And I don't want to lose anything there, so I'm just going to put my stop loss below there. I want to see that just accelerate now. I'm like right on the mean threshold, so chances are it's going to come back, tap the mean threshold, and go lower. Get a big body through here. There you go. Get through this guy here, and I'll move. You want to see some acceleration here now. Let's get you guys down into your lower objectives here. I'd love to see it get down right back through here. Find some support at that and continue down into this array here. Yeah, it just took me out there. If we get another run back into here, or even in here, that'd be nice. Premium discount. You also have to take into consideration, have we just hit 50%? And we have. So we've come back into order block. Now we could just start accelerating through here. So if you're just running into a 50% of your trade, if you would have got on right there, go to 50% of your trade, take a portion, half of it off, move to break even, you just got taken out right there. Load on again, do the same thing again. Or wait till it gets up in the air. Premium. Get a premium for a discount. Ideal one is right in here. If we fail and it goes above us, comes back, gives us a chance to get out before going higher. Order block, validated. Mean threshold from here to here. You're between this candle here now and that one there. And you're between this little tiny swing point below these lows. Body broke above it now. You want to see this turn into a wick and start getting back up into here now. And we may not see any further down here yet. We may, unless we see it up here and then another run down. Break through here. We'll see where this candle closes. Okay, it's going to go lower. Lower, lower, lower. Discount array. There's another one down here. Inside this other range right there. So if you miss this one, body trades below this order block, trades back up into it to get short down into this order inside this range here. You're aiming for this guy down here. And there you have it. There you have it. Have I said this yet? Like array to like array. Have I said? I think I may have mentioned that a couple of times. All right, so now where do we go? Now that we've got into this swing point and that reversal, you could say, well, you've come all the way back down into it now. Remember, we didn't get an opportunity to get in on it. That's where you want to see it get an opportunity to get in on it. Then all of a sudden you see it do this, it drop below. So you say, nope, I'm not getting into that because it's about to go lower. Now, if it runs above here, now you say, okay, now it's going to go higher. But I want to see it get above this here now before I get excited about that going long again. And we've already traded a body below that. So I like the idea of this potentially going lower. I do like this one down here, you guys. If we can take out your lows now in your 5-minute chart, I'd like to see that start reaching down into this discount array down here. Because if that gives us that, then we may have a potential run back into this fair value gap on the daily for a continuation on the upside tomorrow. Or a dig all the way down into here. Like this would be a downward candle into here and then shoot back up. Or even a big dig down into these old lows here. I prefer it. We've got this imbalance. We've got this fair value gap. We've got this one here. There's so many cool places tomorrow we can look for a potential reversal. We have more downside. Looks like people are peeling off here. We got 35 people left. Derek, are you going to do a afternoon extravaganza? And right into the rejection block again of that 5-minute candle. Look at those lows. They're just building up some liquidity down there on a 5-minute chart. And look at that on the highs and the lows. You got to start running. You see this here? Let's look at this right here. See that high was taken out there? There's the reversal on the 5-minute chart. See how we have a body trade below it right here? You didn't get an opportunity to get in on it there, so you wait for this order block here to get taken. It is. You trade back into this candle here, or even that fair value gap to get short, and you're going to go like array to like array. You could trade this on your 5-minute. You're expecting this thing to just give it a little pop down now. And I'm sticking to my point of view. Excellent. I like the way you're sticking to your point of view, Chandra. Stick to it. I'm with you. I'm bearish with you now. Chandra's like, you can't be bearish with me now. You've turned your back on me so many times. Right there. Give this a revisit here. Anywhere inside here would be nice for a short. Come on down. Come on down. Chandra's like, let's do it. Let's go. There you go. There's a, you want that body to be below now? Close below that. And now you're going to go from like to like. How many minutes are left on that one? 1 minute and 40 seconds to close below. See how you swept the lows? Mean threshold. Oh, nice. Let's go, Chandra. Let's go, Chandra. Come all the way down into here. Hit it. Go like to like. Let's make it happen. This is what we wanted for you for a while now. Here you go. Come on. Yoo-hoo! High five, Chandra. High five. Nice work. She goes, I knew it. I knew it was going there. And the confirmation was right there. The body closed below on your 5-minute chart. Takes out this on an order block, return to a here. I don't think it quite hit it though. And now you're really giving a good smash through. So, ooh, love it. Look at that revisit perfectly into that fair value gap smasher. You could also do this one here if you want for the reversal. Right there. Body trades below it. You trade back up into it. Get short. Beautiful. Well done, Chandra. Look at that. Body's respecting that inversion beautifully. Now you can come hammering all the way back up again and go like array to like array again. There's the break finally. Excellent. Well, I'm glad you got something, Russell, as well. Chandra, I hope you got something as well. And Derek, you're on at 3, the last o'clock from 3 to 4, right? I think I'm going to go have some lunch. And what is that? When is 3 o'clock? 3 o'clock is 1 o'clock my time, right? I think it's 2 hours difference. Yes, 3 o'clock. Oh, it's another hour and a half away. Okay, I'm going to meet up with you on your show at 3 o'clock, Derek. So I look forward to seeing you all there. Derek's got a great way to do the macro at the end of the day. And he's good at what he does. Trust me, Derek's a steely-eyed missile, man. He catches some good launches. So anyway, I hope you enjoyed the show today. And if you liked it, smash the like button. And if you're new to the channel, stick around. We're here every day. The Breakfast Club is always here, available to anybody who's willing to learn ICT stuff or trade ICT stuff. We're not into retail thinking here. So if you're a retail trader, sorry about that. You're going to get frustrated. And if you want me to keep giving you signals and stuff, then I give you lots of entries and exits. I'm not doing a lot of trades staring in front of you. I will do the occasional trade. And as you can see, I can lose them too. You get to at least see more of my psychology and how they fail than the actual principles passing or not. But hopefully you got to learn something today. you enjoyed yourself, and you have to learn a little bit about price action and how to stay in and out of the charts and getting the confirmation that you're looking for these big runs down. So congratulations, Shawty and Russell. I'm glad you guys got yourself your reversal. You guys are done?
Yeah.
Oh, okay. And I'm out of here too, guys. So I will see you guys on tomorrow morning. And thanks very much. I'm going to say goodbye to my friends here, and I'll see you guys tomorrow or this afternoon in Derek's one.